Commissioner, the next witness is Mr Craig Orton from Freedom.
Yes. Now, Mr Orton, before you sit down, can I ask whether you'd prefer to make an oath or take an affirmation?
An affirmation, please, Commissioner.
Affirm the witness, please.
I solemnly and sincerely
I solemnly and sincerely
declare and affirm
declare and affirm
that the evidence I shall give
that the evidence I shall give
will be the truth,
will be the truth,
the whole truth,
the whole truth,
and nothing but the truth.
and nothing but the truth.
Do sit down, Mr Orton. Yes, Mr Silver.
Mr Orton, could you tell the Royal Commission your full name, please?
Craig Francis Orton,
And your business address?
level 12, 20 Bond Street, Sydney.
And what is your current occupation?
I'm the Chief Operating Officer of Freedom Insurance
Since what date?
since February this year.
And is it correct that you received a summons to be here today to give evidence and produce witness statements?
Yes, that's correct, Mr Silver.
And do you have a copy of that summons?
Yes.
Tender the summons, Commissioner.
Exhibit 6.65 will be the summons to Mr Orton.
And Ms Orton, you signed a witness statement concerning rubric 622, dated 24 August 2018.
Yes,
Do you have a copy of that statement with you?
I do.
Save for a few things I'll point out in regard to your statement, is the statement true and correct to the best of your belief?
Yes, it is.
Could you turn to paragraph 15 of that statement, please?
Yes.
You'll see there's a description of the types of life insurance cover distributed by life. Would you like to make a comment on paragraph 15b in regard to accidental death?
Yes. From 6 August 2018, we no longer make outbound calls for accidental death.
And in regard to paragraph 15c in regard to accidental injury?
From the 6th of August 2018, we no longer make outbound calls for accidental injury.
In regard to paragraph 15d regarding term life?
Yes. From 21 September 2018, there are no outbound calls for term life. From 6 August 2018, there is no downgrade option to accidental death in the case where the customer fails underwriting.
And then moving to paragraph 15e regarding trauma, have there been changes there?
Yes. From 21 September 2018, there are no outbound calls for trauma.
And finally, in regard to paragraph 15, move to paragraph 15f, which relates to loan protection cover. Are there any changes in that regard?
Yes. From 30 September 2018, there's suspension of marketing of loan protection cover.
At the bottom of that same page, on page 3, paragraph 19, there's a paragraph that deals with life insurance policies that Freedom distributes through 2 Sydney-based call centres. Moving to paragraph 19b, which deals with peak-bound holdings, has there been any change in that business?
Yes.
Could you tell us what it is?
That's to be ceased on 21 September 2018.
If you could turn to page 16 now, paragraph 71, which
Yes.
deals with telemarketing data and the use of it. Has any change taken place in that regard?
Yes.
Could you describe that, please?
Since 31st of August 2018, Freedom has ceased using customer lead data sourced from telemarketing lists.
Thank you. At paragraph 18 of your statement, sorry, page 18, in part C, which deals with remuneration, which is just before question 7. Have there been any changes in regard to the structure for remuneration at
Yes.
Life?
Yes, there has.
That's at Freedom. Could you tell us what they are?
As of 30 September 2018, there is no commissions for sales and retention personnel. Remuneration is by flat rates, and there's no non-monetary incentives based on sales or retention volumes.
I see. And finally, in regard to this statement, at page 22, in paragraph 111, which deals with current incentive programs, if you turn over the page to page 23, subparagraph E, which deals with the performance management and disciplinary policy, has there been any development in regard to that policy recently?
Yes, the sales agent performance management and disciplinary policy was endorsed by the board on 5 September 2018.
And that statement that you made and signed, were there exhibits attached to that statement?
Yes.
I tender that statement with the exhibits, Commissioner.
That statement will become Exhibit 6.66. That's the statement concerning Rubric 6.22 dated 24 August 18.
Sorry, Commissioner, do I put both statements, the change statement?
I'll come to the second statement
See
shortly.
if you keep the second one.
Mr. Orton, you also signed a witness statement concerning Rubric 666,
Correct.
dated the 27th of August 2018. Correct?
Correct.
Do you have a copy of that statement with you?
Yes, I do.
And subject to one change, are the contents of the statement true and correct to the best of your belief?
Yes, they are.
Turning to that statement, which deals with life insurance accidental death cover, has there been any change in the Freedom business since you signed that statement?
Yes, there has.
And what is that?
As of the 6th of August 2018, Freedom Insurance no longer sells any accidental death cover or accidental injury cover on outbound telephone sales calls.
Thank you. And to the best of your knowledge, that statement true and correct now?
Yes, it is.
I tender that statement together with the exhibits to it.
That statement and its exhibits, namely the statement in relation to Rubric 6-66 of 27 August 18, it becomes Exhibit 6.67.
Thank you, Commissioner.
Thank you, Mr. Silver. Yes, Ms. Orr.
Mr. Orton, you've been put forward by Freedom Insurance Group to answer questions in relation to its operations and in relation to the interaction of Freedom representatives with Mr. Stewart and his son.
That's correct.
Now, you were appointed to the role of Chief Operating Officer of Freedom Insurance Group quite recently, in February this year,
Yes.
and you tell us in your statement that you were appointed in order to lead and achieve change management, structural, process, compliance and operational improvements across the business.
That's correct.
So what type of structural improvements were necessary?
There's been a number of changes that have been made since my arrival. Number one is ensuring that the quality assurance on the calls is maintained, and we now target 100% of all sales calls quality assurance being conducted on them, which is important to ensure that none of these types of issues go through. There's also been enhancements to vulnerable customer training and more practical guidance on customer training to ensure better customer outcomes.
The insurance arm of Freedom Insurance Group is Freedom Insurance Proprietary Limited. Is that right?
Freedom Insurance is a distributor, so I'm not sure what you mean by the insurance arm.
Well, what does Freedom Insurance Proprietary Limited do?
Freedom Insurance Proprietary Limited is the company, but it is a distributor and distributes other insurers' products.
So Freedom Insurance Proprietary Limited has an AFSL, an
Yes.
Australian Financial Services licence, and it markets and distributes life insurance products. Is that right?
Yes, that's correct.
And it markets and distributes them direct to consumers.
That's correct.
Freedom itself doesn't issue life insurance products.
That's correct.
The life insurance products that you market and distribute are all issued by licensed life insurers.
That's correct.
Now, Freedom markets and distributes life insurance products solely through telephone sales,
Yes, that's correct.
and those comprise inbound calls where a potential customer calls Freedom and outbound calls where Freedom calls them.
That's correct.
Now, what proportion of sales are made in inbound calls?
I don't recall the exact number, but by far and away, the majority of calls are outbound.
The vast majority of your
Yes.
sales are achieved through outbound sales
Correct.
calls, aren't they? And you've got 2 Sydney-based call centres.
We do at the moment, although we are terminating the relationship with the external call centre, Peakbound.
Yes, so you've decided to cease using that external call centre and just have your in-house call centre, is that right?
That's correct.
And that's going to happen from the 21st of September this year.
That's right.
Now, Freedom currently distributes 6 types of life insurance cover, is that right? I just want to go through them with you and you can tell me if I've got this right. There's the final expenses cover, which is a form of funeral insurance.
That's correct.
And a distinctive feature of that product is that Freedom doesn't charge premiums for the first year.
That's correct.
Then Freedom also covers life cover, life insurance,
Yes, it does.
trauma cover,
Trauma is attached to the life cover. But
yes,
That's right. Yes.
loan protection cover,
Correct.
accidental death cover,
Correct. It's available. Yes.
and accidental injury cover.
Correct.
Now, Freedom told the Commission at 3 o'clock yesterday afternoon that it has decided to cease selling all of these products except funeral insurance and loan protection cover through outbound sales calls. Is that right? That's what you told us at 3 o'clock yesterday
correct.
afternoon?
That's correct.
That's a very significant change, isn't it, Mr. Orton?
It is a significant change.
And why has Freedom made that change?
There are a number of reasons. One, we want to ensure that we're working on any regulator concerns in the market, particularly around accidental death and accidental injury. We want to change the sales process so that for all of our products, there is a 12-month period where customers can understand the purchase decision. And as part of that, we've ceased collecting banking details on the first call so that it truly is 12 months free cover. And we're trying to work through that structure orderly and as quickly as we possibly can to improve consumer outcomes.
Having received the information from Freedom at 3 o'clock yesterday that you had made this significant change to your business model, the Commission sent a notice to produce to Freedom overnight. Have you seen that notice to produce?
Yes, I have, Miss Orr.
All right, I'll bring that notice to produce up on the screen. That's RCD 999900670001. There we have it. This is the notice to produce that was sent to the Commission, sent by the Commission to Freedom at 6 o'clock last night. and what the Commission sought were documents recording the decision, which it was advised of yesterday, the decision made by Freedom to cease the outbound sale of accidental death, accidental injury, term life insurance policies and trauma policies, and also documents recording the decision made by Freedom to cease commissions for sales and retention personnel as of the 30th of September. And there was a third category, which we'll see over the page, which related to your decision to cease providing non-monetary incentives based on sales or retention volumes as of the 30th of September 2018.
Correct.
Now, that notice was returnable at 9 o'clock this morning.
That's correct.
How many documents did Freedom produce under that notice?
One, which was the board minutes of the meeting in relation to item B.
So one document was produced about all of those decisions, and it was minutes of a meeting of the Freedom Insurance Group Board on the 5th of September this year.
That's correct.
All right. I tender the notice to produce, Commissioner.
Exhibit 6.68 will be notice to produce NP 1410 to Freedom Insurance Group Limited, RCD 999900670001.
Now, can I take you to the single document that Freedom produced under this notice to produce, which is FIG 0011 0001 0001? Now, this is the minutes of the board meeting on the 5th of September. We see from the first page that you were an attendee at that meeting.
That's correct.
You see that? You recall this meeting?
I do.
Now, can you identify where in this document the decisions that you advised the Commission of at 3 o'clock yesterday are recorded? I would like to give you a hard copy of the document to look through. We have one here. The hard copy document that you have has the document ID numbers at the top of the page. So if you could use those to identify any part of these minutes that records the decisions that you advised the Commission of yesterday.
Ms. Orr, would it be possible to see the notice to produce again, just so I can line them?
Yes, yes, certainly. The notice to produce, which we had on the screen just before, was RCD 9999. Here we have it now.
Yeah. So in relation to point B, we've
Yes.
moved to item number FIG.0001.0001.0005.
If we could have that on the screen at the same time, that would assist. Yes.
Item 5,
Yes. What does item 5 record?
sales and retention agent remuneration,
Yes.
and my explanation to remove the variable commission component from the remuneration package provided to sales and retention agents.
Yes, I see. So item 5, which we see on the right-hand side of the screen, you say records the decision which is dealt with in category B of the notice to produce,
Correct.
the decision to cease commissions.
Yes. And
Do
it
you
can
see any of the other decisions reflected in this document?
No.
Are there no documents meeting the description of category A? Are there no documents recording the decision made by Freedom to cease the outbound sale of those sorts of policies as of those dates?
No, there's not, but I can explain.
Yes, please.
So the decision was made in late July to cease collecting banking details on the first call. This was done for a couple of reasons. The main reason was to allow customers a true 12-month period and move from an opt-out method to an opt-in method where they had to provide their banking details beyond that period should they wish to continue the cover. It also gave customers the opportunity and us the opportunity to provide further information along the way to ensure that they understood their purchase decision. When we looked at the accidental death and accidental injury products, which comprise quite a small component of Freedom's total business, we decided that it was better to remove those because they did not have the 12-month period.
When did you make that decision?
Late July, early August, that decision was made, August 6, I believe.
And there are no documents recording that decision that you made in late July or early August?
There are no documents because it was a decision between the CEO and I.
Why are there no documents when it's such a significant change to your operating model, Mr. Orton?
Ms. Orr, it's not a major component of our business, accidental death and accidental injury. We knew that the regulator had some concerns. It seemed like the better option for customers to simply cease selling it.
You didn't think that was something that you should tell the Commission in either of the witness statements that you provided the Commission in late August?
In hindsight, you should have been told.
Well, one of those statements was directed entirely to your sales of accidental death products. You didn't think to tell the Commission in that statement, which you made on the 27th of August this year, that you had decided in late July or early August to stop selling those policies by outbound sales.
At the time, we were still selling the product, and we are still selling the product, it's
Yes.
just not by outbound sales.
Yes, you didn't
So-
think that was a relevant matter to deal with in your statement to the Commission about your accidental death product.
In hindsight, I agree. It should have been.
Why was
forward.
it not included, Mr. Orton?
I don't have an answer for that, Ms. Orr. There was no intent to not provide the right information, and we've provided a lot of detailed information to the Commission.
Just not a key piece of information, Mr. Orton, which is that you've ceased the outbound selling of those products from late July or early August.
I agree.
I'll let you continue. You were explaining how these decisions were made and you dealt with the accidental death, and I think you incorporated accidental injury in that decision process that you've just described as well.
Yes. Yes.
What about the decisions that were made to stop selling life insurance policies and trauma policies by outbound sales? Can you tell us why there are no documents recording those decisions?
Yes, I can. That was a decision late last week, and the decision was that given that we're moving to this new sales process without collecting bank details and providing customers an opportunity to learn more about the product before they need to actually pay anything, term life and trauma policies didn't fit into that category. We only had a very small number of agents working on that in an outsourced contact centre, which is peak-bound, the one that we're ceasing, and we decided that it was better to not do that at the moment, given regulatory concerns around giving customers the right information Thank you.
Better to not do that at the moment. What exactly is the decision that you've made in relation to your sales of life insurance and trauma
To
policies?
cease outbound.
And you say you made that decision late last week.
Correct.
Who made the decision late last week?
It was a discussion between the head of marketing, the CEO, and myself.
And none of you recorded that decision in any document.
No, not that I'm aware of,
Why not, Mr. Orton?
because it was a decision that we could deal with without creating unnecessary paperwork.
Unnecessary paperwork.
I don't know why we would have to record that decision. It was as simple as arranging for the outsourced call centre to cease operating outbound calls for life and trauma.
Your business model, Mr. Orton, involves making sales, almost every sale, through an outbound sales model. Do you agree with that?
Correct.
And you sell 6 products through outbound sales, and you tell me that the decisions you've made to stop selling 4 of those 6 products through outbound sales are not decisions that warrant any formal recording. They are significant changes to your business model, are they not, Mr. Orton?
Those products, those 4 products combined that you're talking about, make up less than 15% of sales.
So what does that mean? What is the remainder made up of?
The final expenses product.
So most of your business is in selling funeral insurance, is that right?
That's right.
What proportion of the 85% is sales of funeral insurance?
Sorry, no, 85% is funeral insurance.
And what about your loan protection product? That's the other product.
Very small product that was trialled, and that was already being considered to be shelved for a while.
I see. So you've decided to continue selling your main product, the funeral insurance product, through outbound sales? Is that right?
We've decided at the moment to work with ASIC on the model, and we've engaged ASIC on a number of occasions to talk through the appropriate way with a view to better outcomes. We've removed billing details, like I said, up front, and we're trying to provide more information to customers before they are committed to pay anything for a funeral product.
So is the answer to my question yes, you are going to continue to sell your main product, funeral insurance, via outbound telephone sales?
Yes, at this stage, yes.
Okay. At this stage, is that under review?
Well, at the moment, we're in discussions with ASIC, and we want to ensure that the model that we're proposing fits in with their concerns about outbound.
And who is going to sell funeral insurance in outbound sales? You're closing down one of your sales centres, which was the external sales centre. So is it going to be in-house Freedom people in your own sales centre who will sell funeral insurance?
That's correct.
Okay. Now, I want to take you to some aspects of the minutes that you've provided under the notice to produce. Perhaps if we can take the notice to produce down now and bring up the first and second pages, 0001, 0002 of the minutes.
Yes.
Could I take you first to item 3, Royal Commission? The board was informed that CO, Craig Orton, has been subpoenaed to give evidence at the Royal Commission early in the week commencing 10 September 2018. Craig Orton has been intensively reviewing the documents and witness statement with a focus on what is perceived as the key issues. Craig Orton is being assisted by lawyers. DC, now that is... Well, I can't see a DC there. That must
No,
be
but
a
it should be
typographical
Dean
error.
Carrigan.
That should be who, sorry?
I believe that should be Dean
Dean
Carrigan.
Carrigan, DO, informed the board that the key themes that are likely to be focused upon by the Royal Commission are targeting of vulnerable customers, conduct of sales agents, including high-pressure sales, the retention and cancellation process, objection handling by sales and retention agents, remuneration structures for sales and retention agents, and the quality assurance process. See that there?
I do.
But it might potentially broaden to other matters. And we then see a reference to a witness statement from Mr. Stewart, who's just given evidence, being placed in evidence, and it's likely that this will be an area for question. You indicated that if given the opportunity in evidence, you would apologise to Mr. Stewart and his son for any distress caused. And you confirmed that the company has separately apologised directly to Mr. Stewart. I'm happy to give you that opportunity right now, Mr. Orton.
Thank you. Thank you, Ms. Orr. Mr. Stewart, to you and your son, I sincerely apologise for that. Your son had to be put through that, and you have that from the bottom of my heart. It should not have occurred.
You also indicated to the board in this meeting, Mr. Orton, that your approach to providing evidence would be to assist the Royal Commission and to openly acknowledge where conduct or underlying processes do not meet the standards that you and the company find acceptable. You indicated that where appropriate, you would inform the Royal Commission of the significant changes and initiatives that have either been recently completed or which are otherwise progressing. You confirmed with the board that key initiatives that have been implemented or which are otherwise in the process of being undertaken were under the guidance of the Compliance and Operational Committee, and the board endorsed those changes and initiatives. So we see after that discussion that DH, the chairman, David Hancock, stated that as there is potential damage to brand arising out of the Royal Commission hearing, he requested that preparatory work to be able to respond immediately following the hearing be commenced forthwith. Did that occur?
Yes.
Okay. Now, over the page at 0003, we see an item that refers to the ASIC Direct Life Review, and we see that Keith Cohen, one of the directors, gave a high-level summary of the main issues arising for freedom from the ASIC Direct Life Review.
Correct.
And then if we turn to 0004, we see a further discussion of the ASIC Direct report. Do you see there, ASIC have yet to reach a determination on what outbound activities will be restricted, but the message was clear that there will be significant restrictions introduced on the making of pure outbound calls for the sale of life insurance products. And below that, we see that Freedom undertook to take the ASIC feedback to its board and consider the implications. And finally, can I take you to 0007 in this document, which is headed Market Notification. You see the second paragraph there. The board agreed that following the ASIC Direct Life Review and ASIC's comments at the meeting of Monday, 3 September 2018, it is apparent that the company will need to change its business practices to some extent. Whilst the full extent of the changes is not known, and that no clear decision on the future of the business model will be made until after the strategic review, it was considered that this must be disclosed to the market, together with the fact that the business is reviewing its model in light of the likely regulatory changes and will take into account ASIC input in this process. What are the likely regulatory changes referred to in that paragraph, Mr. Orton?
We obviously reviewed, Ms. Orr, the Direct Life report. There are a number of recommendations in that report around accidental death, around accidental and concerns with it, around some other issues with outbound telemarketing and ensuring better consumer outcomes. We were suggesting that, particularly with the statement that outbound telemarketing should be ceased, that we needed to look at various options. That's what it was mainly around.
So are there likely regulatory changes, or is it just that ASIC has indicated the approach that it intends to take in enforcing the law?
We do need to, when we want to, engage with ASIC more on determining exactly what their recommendations are. In a meeting with ASIC that I held, they were keen to say that there will be a transition period and that they will consult with industry during this process. So we were working through those various issues.
A transition period in relation to the cessation of outbound sales of life insurance? Is that what you understood that to mean?
Yes, but when I read the report from ASIC, it talks about certain outbound for those products.
And why have you decided to continue with your outbound sales of funeral insurance?
I think there's varying degrees of outbound, Miss Orr. And one thing we would like to discuss with ASIC is the new business model that we have, one that I've already described. We'd also like time to consult with them on exactly what they mean by the cessation of outbound, because there's still a lack of clarity on what that means. Does it mean that if someone comes to your website that you cannot call them back? Does it mean that if someone searches for you and asks for a call, you cannot call them back? Or are we talking about variances on the lead generation side? And that's what we want to talk to ASIC about and comply with the law and ensure better customer outcomes.
Well, I want to put to you that you've decided to continue outbound sales of funeral insurance not because of any varying degrees of outbound sales, but because 85% of your business comes from outbound sales of funeral insurance.
Definitely that is the most, it is the most important part of our business, I agree.
And that's why you've decided to continue it in the face of ASIC's report on the direct sales of life insurance.
That's not true, Miss Orr. That's not the reason. The reason is that we can provide the true 12-month cover on that area. Certainly it does benefit us as well, I agree.
You've referred a few times to true 12-month free cover. Do you accept, I take it you do from that language, that when you did what you did until very recently, which was take someone's payment details when the purchase was made and hold on to them so that you could start charging them at the expiration of the 12-month period, you were not truly giving them a 12-month free period because you were not giving them the option to opt in at that time. You required them to opt out, to actively contact Freedom and tell them at the end of the 12-month period that they didn't want to continue with that product.
I think it was a bad choice of words for me saying true 12-month period, but you're right, it is now the opt-in at the end of the 12 months rather than the opt-out.
And do I take it from that you accept that the opt-out model was not a model that you should have had in place?
I don't think, Miss Orr, that the model itself was a bad model. I think it could have been improved. I think the intention was always to provide people an opportunity to learn more about their cover over that 12-month period. They were given updates and renewal letters at minimum prior to any drawing occurring from their account, but I agree it could have been done better.
Well, they had to actively take a step to cancel that policy before you started activating the direct debit payments. And if you didn't hear from them, the direct debit payments commenced at the expiration of that 12-month period, didn't they?
That's correct.
Mm-hmm. But you say that this was a good thing, or at least not a bad thing, because it gave them a 12-month opportunity to learn more about their cover.
Correct.
Well, shouldn't the situation be that they've learned all they need to learn about their cover before they make the decision to purchase that cover?
I agree. I agree with what you're saying. When I say they've had no monetary loss over that 12-month period, if we do provide more information during that period, I think it may help the customer in the long term. I agree that they're purchasing the product at that stage.
And do you agree that the way you sell the product with the 12-month free period may confuse customers who feel that they're not purchasing the product at that time, they're not purchasing it until 12 months later when direct debit payments come out of their account?
No, I don't agree with that. I think it's quite clear that,
But you've made the decision to change this.
yes.
Commissioner, I tender the minutes of the board meeting dated the 5th of September 2018.
They're marked as draft, I think, draft minutes, board meeting 5 September 18, FIG 0011 0001 0001, exhibit 6.69.
Now, Mr Orton, you were present for the evidence that was given by Mr Stewart earlier today,
I was.
and you heard that Mr Stewart's son was sold a freedom protection plan which encompassed 3 different products: the funeral policy, an accidental death policy and an accidental injury policy.
Yes.
Now, the accidental death policy, I want to ask you some questions about that. As you told us yesterday, you're no longer selling that through outbound sales, but you are still selling that. That is a policy that you will still market and distribute.
We will have it available.
Will you market and distribute that product?
It will be on a website, so if that's marketing, yes. What it's available for is many funeral products have an accidental death benefit. When someone transfers to us, if they may contact us and say that they want the accidental death benefit, and at that stage we may offer it to them, but we certainly will not be promoting it in any other way.
What does the accidental death policy that you offer provide?
It provides coverage. The accidental death component provides coverage in the event of accidental death.
What coverage does it provide then?
A benefit, a life benefit for the in the event of an accident, so for loss of life.
And what about your accidental injury policy? What does that provide?
It provides a number of benefits for major injuries, and then also has a broken bone component, which provides benefits as a proportion of the total benefit paid for accidental injury for broken bones.
In your statement, you say that accidental death cover combined with accidental injury cover provides a relatively low-cost alternative insurance benefit to full life cover. You explain what you mean by that?
It provides a cheap alternative, but doesn't provide coverage for natural causes.
Well, it's not a true alternative to life cover, is it?
No.
And that's because the circumstances in which you can claim on an accidental death policy and an accidental injury policy are much more limited than under a life insurance policy.
That's correct.
Okay. Now, your flagship accidental death product has been the Freedom Protection Plan accidental death policy. That was the product that was sold to Mr Stewart's son.
That's correct.
And that's the only accidental death cover that you currently distribute and market?
Correct.
Okay. And you describe it in your statement as a simple insurance product that is fairly generic in nature. What do you mean by that?
Most accidental death policies are very similar. They don't have a lot. They do have some exclusions, of course, but they're fairly generic. And by that I mean that it's death by accident.
Can I take you to an exhibit to one of your statements, exhibit
Yes.
CFO 1 tab 8, which is FIG 0003 0001 0022. Now, this is a recent product training presentation given to Freedom sales agents. Is that right, Mr Orton?
Yes.
We
yes,
see
saw.
it's dated July last year.
Yes.
Now, can I take you to 0044 within this document, which sets out the main features of Freedom's accidental death cover?
Yes.
So we can see from this slide that applicants for accidental death cover have to meet age and residency criteria,
Correct.
and all lives insured also have to meet those criteria and certain criteria in respect of their relationship to the policy owner.
Correct.
And the cover requested must be within the permitted sum insured, which is $50,000 to $500,000 for adults and $10,000 to $30,000 for children.
Correct.
But beyond those matters, there are no additional underwriting criteria for acceptance.
That's correct.
So in contrast to life insurance, where there would be a detailed set of medical or health questions, none of those questions need to be addressed for the sale of accidental death insurance.
That's correct.
It's a guaranteed acceptance product.
Yes.
Now, this slide also makes clear that a Freedom accidental death policy can provide cover for up to 8 family members. Do you see that? Under special features.
Yes.
Why is that? Why do you have that feature?
Because cover is available for most of our product, or for the funeral plan, freedom protection plan, and with accidental death cover for each family member, up to eight customers.
Do you encourage your sales agents to sell cover for up to 8 family members?
I think they have been encouraged in the past. Yes.
Excuse me. The premiums for accidental death cover, you tell us in your statement, are a flat rate. Is
Yes.
that right? And can I take you to the equivalent of this slide for accidental injury cover at 0050? You have to take out accidental death cover to be eligible for accidental injury cover. Is that right?
That's correct.
And the accidental injury cover works as an advanced payment of the accidental death cover benefit.
Correct.
It's a once-only benefit. We see that from a couple of pages on, but am I correct in saying it's a once-only benefit?
Depending on the injury.
I'll take you to 0052 and perhaps you can help me understand that, because it says middle paragraph, other than for a broken bone, an accidental injury benefit is a once-only benefit. So what does that mean?
Yeah, you would only be paid the benefit for once.
Okay. Now, we see also from this slide that any payment under the accidental injury cover reduces the amount payable under the accidental death cover.
Correct.
Right. Now, prior to the changes that you told the Commission about yesterday, in what circumstances did Freedom try to sell a customer an accidental death or an accidental injury policy?
They were sold with the final expenses product on the Freedom Protection Plan. And prior to the dates that I spoke about before, they were sold for people who failed the underwriting of a premium life product or a term life product.
So they were sold to people who bought funeral insurance,
Correct.
and they were sold to people who didn't pass the underwriting process for a life insurance product.
That's correct.
Now, you heard, did you hear the evidence yesterday of Mr Martin from Clearview?
I heard some of it.
Did you hear the questions that I asked Mr Martin about the views that ASIC has recently expressed in relation to downgrading sales practices for accidental death insurance?
I didn't hear the questions, but I know ASIC's view.
What do you understand ASIC's view to be, Mr Martin?
I don't believe that ASIC thinks that it's appropriate for a downgrading from a term life, failed term life, and if it is to be offered, then the sale should not be concluded at that time. There should be some time to review.
But do you accept that Freedom did engage in downgrading sales practices in relation to the sales of accidental death insurance?
Yes, we did.
And it should not have? Is that your position?
My position now is that I think it is not clear enough on all occasions that the benefits for the customer. So yes, I don't think it should be done.
It shouldn't be done.
No, I agree.
Now, in addition to selling accidental death and accidental injury policies to people who don't qualify for life cover or who've bought a funeral insurance policy, it's also been Freedom's practice to try and sell these sorts of policies when people call up to cancel an existing life insurance policy, hasn't it?
Oh, it has, yes, you're right.
Now, why does that happen? Why does Freedom, when someone asks to cancel their life insurance policy, try to sell them an accidental death and accidental injury policy?
I'm not sure of the actual occasions, and I'd have to know from that individual, but I can imagine if it was a situation where the cost was prohibitive, they may offer it as an alternative.
Well, it's not something that was done just by an individual, was it? It's something that Freedom told its sales agents, its retention agents to do.
Correct.
Do you agree with that?
Yes, I do.
Could I show you FIG 0008 0008 0013? Now, this is Freedom's retention training manual, which appears to us from the metadata, although it's undated, to be from the 3rd of July 2017. Have you seen this document before, Mr Orton?
I have.
And it's a training manual for retention officers. Now, they're the Freedom representatives who handle calls from customers who want to cancel their policies. Is that right?
That's correct.
Why are they called retention officers?
They're actually called customer care agents as well, but their job is to try to retain the customer.
It's their job to try and talk the customer out of cancelling their policy, isn't it?
It's their job to provide alternatives, but certainly, yes, it's better for the company if the customer keeps it.
And so they're instructed to try and talk the customer out of cancelling their policy, and if necessary, downgrade them to an accidental death or an accidental injury policy.
They're instructed, Ms. Orr, to provide alternatives for the customer calling in to cancel.
Well, could I ask you to look at a particular page in this training manual, which is 0044? We see a page headed cancellations. The majority of calls you take will be cancellation requests. This is where your sales expertise and problem solving skills come into play. Every call should be treated as if it is your first call for the day, motivation and key in this role. You should always try your hardest to stay motivated and determined regardless of your save percentage that day. What was the save percentage?
The save percentage is the number of people, policies that they managed to save.
So they had targets for how many policies they had to save?
They did.
So that was part of their KPIs?
Yes.
And that was part of their remuneration structure?
Yes.
That next call could be the save or the conversation you were waiting on to turn around your results. Try your best on every single call. Every premium counts when it comes to our team targets. If you cancel a policy, remember you must offer accidental death and injury cover. You will fail your quality assurance if you don't.
Correct.
So it's a very strong direction to your retention officers. They will fail their quality assurance unless they attempt to sell the customer accidental death and injury cover.
Yes, it is.
Was that an appropriate direction to give your retention officers, Mr. Orton?
No, I don't think it is. I don't think it is.
Is that still a direction that is given to your retention officers?
I don't know. I will need to check that, but it should not be offered, and it will not be offered in the future.
I see. So if that is still the position, you will make changes, will you?
I will.
Okay. Now, do you agree that the practice of trying to sell accidental death policies when people are calling up to cancel their life insurance creates a risk that they think they're getting something like a life insurance policy for a lower cost when they're really getting a very different sort of product?
I do think if it's not clearly explained that there is that risk. Yes.
How was Freedom remunerated when it sells accidental death policies for an insurer? What does Freedom get for doing that?
Receives an upfront commission and a trail commission.
And what's the size of the upfront commission?
Accidental death, I don't have to hand. But it's well within any of the lift requirements. So I want to say around 50, but I don't know the actual amount for accidental death.
Well, you tell us in one of the exhibits to your statement dealing with accidental death cover that the initial commission can be between 33.5% and 60%.
Yep, that sounds right.
And what about the trail commission? Do you know how much that is?
Less than 20.
Less than 20%. How much less?
I'm not sure of the trail commission on accidental death. Apologise.
The ASIC Direct Life Insurance Report, I take it from answers you've already given me that you're familiar with it.
I am.
Before I move to asking you some questions about that, I'll tender the retention training manual.
Freedom Insurance Retention Training Manual, July 17, FIG 0008 0008 0013, Exhibit 6.70.
Now, the ASIC Direct Life report contains concerns not just about the way accidental death products are sold, but about the value of those products. Are you familiar with those concerns?
Yes.
And you may have heard me take Mr. Martin yesterday to ASIC's view that these are policies that offer very limited benefits to consumers.
I didn't hear that yet.
And ASIC in that report analysed the claims ratio for accidental death policies across the entities that it reviewed, which didn't include Freedom.
Yes, that's right.
But we see from those entities, and I'm happy to take you to this part of the report if it assists, RCD 0003 0075 0138, and if we could go to 0146. We see at paragraph 35 that ASIC found that data shows that this product offers little benefit to consumers. The claims ratio for the 2015 to 17 financial years was 16.1%. This means that for every dollar of premium paid by consumers, only 16 cents was paid in claims by insurers. And if we turn to 0169 in the document, we see from figure 5 there that of all the types of life insurance, accidental death had the lowest rate of claims accepted. 26% of claims were accepted across the entities that ASIC reviewed.
Yes.
36% were denied and 38% were withdrawn.
Yes.
Now, we've referred to this report a number of times, Commissioner, but I haven't yet tendered it. I'll tender it now.
Exhibit 6.71 will be ASIC Report 587, Sale of Direct Life Insurance, RCD 0003 0075 0138. Exhibit 6.71.
Now, as I said, this analysis didn't involve analysis of Freedom data, but the Commission asked Freedom to provide it with that data. So you've provided information about your accidental death claims ratio and other sales information covering a number of years. I want to take you to that data, particularly for the last 3 years. But before I do that, do you know what proportion of deaths in Australia are the result of accidents?
I don't know off the top of my head, but it's a small percentage.
How small do you think it is?
I don't know.
Well, can I ask, while we have this report on the screen, for us to go to page 0208, where ASIC refers to some ABS statistics. That's the wrong page, number 358. Sorry, if we could go to 0206. Do you see there, paragraph 358? Accidents make up a very small proportion of deaths in Australia. Data from the Australian Bureau of Statistics indicates that of all the deaths that occurred in 2016, around 5% were as a result of accidents.
Yes, I see that.
Now, can I take you to the numbers of accidental death policies sold by Freedom over the last 3 years? We'll bring up your accidental death statement, which is FIG 0006 0001 0624, and I want to display a table which you have included in paragraph 43, that's 0639 in the statement. And we see from that table at paragraph 43 that in 2015, I'm going to deal with the last 3 years, 2015, Freedom sold 9,611 accidental death policies.
Correct.
And in 2016, the number more than doubled to 19,282.
Correct.
Do you know why?
Yeah, I believe so. I think there was a massive increase in sales for the final expenses product, which also had accidental death included or as an option during 2016 and 2017. The growth of the business has been quite strong over recent years.
So just to be clear, although you're going to continue to sell the final expenses product, the funeral insurance product in outbound sales, you're no longer going to give the option of accidental death cover with that policy. Is that right?
Not through outbound sales, no.
Thank you. Now, in 2017, the number of accidental death policies that you sold increased again to 21,079 policies.
Correct.
And this year, the numbers are on track to increase again, because halfway through this year, you've already sold 12,007 accidental death policies.
That's correct.
Now I want to turn to what you've told us about the premium income and the claims made in each of those years. So if we could display both 0640 and 0646 on the screen, we'll see two tables that you've given us.
Yes.
The one on what will be the left-hand side relates to premium income, and the table on the right-hand side relates to claims. And if I could start with 2015, we see that the total annual premiums paid for accidental death policies on issue that year was over $366,000.
Correct.
And in that year, you got 4 claims on your accidental death policies. Do you
Correct.
see that?
Yep.
And all 4 of those claims were allowed in full.
Correct.
And the ratio of premiums received to amounts paid out for that year was therefore 55%.
Correct.
From then on, the product became increasingly profitable, because if we look at 2016, your total premiums were over $1.1 million.
Correct?
In that year, you got 10 claims on accidental death policies.
Correct?
You allowed 8 of those. 1 was withdrawn and 1 was denied.
Correct?
So the ratio of premiums received to amounts paid out was 46%.
Correct?
Then in 2017, the premiums paid had increased to over $2.1 million.
Correct?
You got 22 claims
Correct?
and you allowed 10 of those.
With a number still impending.
That's right. So far you've allowed 10
Correct?
and you've made an ex gratia payment in relation to 1 claim.
Correct?
Why did you make that payment?
I can't recall the actual details, but it may have been that there was incorrect or insufficient information given for that customer.
Right. But you don't recall the details?
That's as much of the detail I remember.
And 3 of the claims were withdrawn for 2017.
Correct?
2 were denied in full
Correct?
and 6 are pending.
Correct?
And the ratio of premiums received to amounts paid out fell to 14% in 2017.
That's correct?
And then for 2018, the total premiums so far are over $1.6 million.
Correct?
So you're on track to well exceed the premium income of the previous year again.
From premium income point of view, yeah, yes.
You got 18 claims.
Correct?
You've allowed 3 of those so far.
Correct?
1's withdrawn, 4 were denied, and 10 remain pending.
Correct?
And the ratio of premiums received to amounts paid out is 25% so far for this year.
That's correct, but I would point out there's still 10 in pending.
That's right. Does it surprise you that Freedom has sold substantial numbers of accidental death policies in the tens of thousands each year, and generally it only receives a very small number of claims, no more than 22 in any of the last 3 years?
That probably doesn't surprise me for an accidental death product, but they are larger benefits.
Why doesn't it surprise you?
They generally are a small number of claims, but of higher value.
Well, that's about how much is paid if a claim is made, but does it surprise you that so few claims are made?
Not really. It's not that many claims made in life insurance either, when you consider the number of policies that occur.
So it doesn't trouble you that you sell tens of thousands of these policies each year and receive no more than 22 claims in a year? Does that say anything to you about the value of the product for the consumer?
From the consumer's point of view, I'm more concerned about what's given back and the loss ratio. And if that loss ratio is at appropriate levels, and I don't think that 14% is appropriate for the year that it was in, but when you're looking at others that are 55 and already 25 this year, I don't think it's too low, but it could, with accidental death products, it could have a very bad year in terms of financial loss for an insurance company, good year for the customer, or probably not, but it does have variations.
Well, I want to put to you that it's reflective of the limitations of the product, and to put that proposition to you, I want to ask you to look at one of the exhibits to your witness statement, tab 8 to exhibit CFO 1, which is FIG 0003 0001 0022. this is the product training presentation that I took you to earlier, Mr. Orton. Can I ask you now to look at page 0042?
Yeah.
Because from this page we see Freedom's training for the sales of accidental death cover. Can I ask you to look at the following page, 0043? And in the blue box at the bottom of the page, we see the definition of accident for the purposes of this policy. An accident means an unexpected event occurring while the insurance is in force, resulting in bodily injury where the injury is directly and solely caused by accidental, violent, external and visible means without any other contributing causes such as illness or disease.
Correct.
So to qualify as an accident, a person has to suffer an injury which firstly is directly and solely caused by an accident.
Correct.
And the injury secondly has to be caused by accidental, violent, external and visible means.
Correct.
What does that mean?
I think it means, and if I continue the sentence, it can't be contributed to by illness or disease. So someone with osteo who leans on something and breaks their bone
Would not be covered.
Would not be covered. Correct.
Are you able to offer any more explanation of what the phrase accidental, violent, external and visible means is intended to cover?
I can't.
And the third thing is that there need to be no other contributing causes such as illness or disease.
Correct.
This is a very narrow definition of an accident, isn't it, Mr. Orton?
Guess it could be construed that way, yes. Yes.
Is there any other way to construe it, Mr. Orton?
No.
And this is the same definition that applies to your accidental injury policies.
Yes.
So not only does the policyholder need to meet the definition of accident, this narrow definition, but their coverage is further diminished by a number of very significant exclusions under the policy, isn't it?
Correct.
Can I ask you to look at 0045 in this document? We see there that a benefit will not be payable if the life insured's injury occurred before the policy commencement date. Additionally, a benefit will not be payable if the life insured's injury is a direct or indirect result of self-inflicted injury, criminal activity, aerial activity, motorised sport, war or terrorism, alcohol or drugs, intentional act by carer, and specific occupational tasks.
Correct.
Those are the exclusions. And we see that the exclusion applies if the injury is as a direct or indirect result of any of these things. Indirect result is a very elastic term, isn't it, Mr. Orton?
It can be, yes.
Yes. And you explain these exclusions in your witness statement. You tell us that aerial activity means the life insured flying or otherwise engaging in any aerial activity except as a fare-paying passenger in a fixed-wing motorised aircraft that is operated by a licensed airline or charter company.
Correct.
So it would exclude an injury sustained, for example, in a helicopter accident.
By that definition, yes. Yes.
And motorised sport, you say, means participating in any motorised sport as a rider, driver, passenger or crew.
Correct.
And the alcohol or drugs exclusion means that where an accident is the direct or indirect result of the effects of alcohol or drug misuse or any illicit drug use, that's also excluded.
Correct.
And the specific occupational tasks that are excluded include working above 10 metres from the ground,
Correct.
working underground, working on a boat or an oil or gas rig, and any underwater diving.
Correct.
So given that there are already a very small number of people in Australia who die as a result of an accident, your accident definition and these exclusions are likely to have a very significant impact on the ability of a person to ever claim under these policies.
I agree.
Thank you. Commissioner, if that's a convenient time.
2 p.m.
Thank you, Commissioner.
Yes, if we could have you back in time to begin at 2 o'clock, please. 2 p.m.
Mr.
Yes,
Orton.
Ms. Orr.
Before the break, I was asking you questions about the benefits provided under your accidental death and accidental injury policies, and I asked you about the definition of accident, and I asked you about the exclusions under those policies. Now, do you consider that Freedom's given its customers adequate notice of the exclusions and of the nature of an accident that is required to qualify for benefits under those policies?
Not always over the phone.
When you say not always, when did it happen?
I'm not sure. I'm not
Are you
sure.
aware of
No, I'm
adequate
not.
notice ever having been given over the phone?
No, I'm not.
You've reviewed the scripts that were used by your sales agents?
I have reviewed the scripts.
Yes, and you've annexed the Freedom Accidental Death cover script to your statement as tab 18 of your first statement, and we see from that script the statements that a sales agent has to make about the benefits under that policy.
Yes, I remember that. Yes.
And there was nothing in the statements that the sales agent was required to make that dealt with in any detail the nature of the definition of accident or the exclusions that applied under the policy, was there?
They are referred to another folder, supplementary folder, which has some of that information in it, although I agree that there was insufficient information.
Where are they referred to? They're not referred to in the scripting.
There's a PDS sign on the script that says go to the PDS and read some areas out, but I agree that it wasn't done regularly.
All right, perhaps if we just have a quick look at that script that you've provided us with then, FIG 006. 0006, I'm sorry, 0001 0566. This is the script that you annex to your statement for selling accidental death over the phone.
Yeah.
And we see on this first page the benefit overview, and we see what the sales agent was directed to tell the consumer about the benefit available under the policy.
Yes.
And you accept that there was nothing in there about the nature of the accident that was needed to qualify for benefits or the exclusions under the policy.
Not in that section of benefit overview. I was referring to the definitions, which is in eligibility, but you're correct, Ms. Orr, it's not there.
Are you referring to the definitions of Australian resident,
Yes.
partner, de facto and relative on
Yes.
page 31 of the product disclosure statement?
Correct.
Which is not relevant at all
No,
to the
I agree.
nature of the accidental death benefits, is it?
No, I agree.
So you accept that your sales agents didn't bring these matters to the attention of people to whom they were selling these policies?
Agree.
Now, Freedom's own claims handling records, which you've given us data from in your accidental death statement, suggests that there may well be confusion by people who make claims under accidental death policy about what they're covered for. Do you agree with that?
There could be confusion, I agree.
Well, you tell us that since 2014, there have been 55 claims received by Freedom under accidental death policies, and 7 of those have been denied in full. Do you recall that?
I do.
And of those 7, 5 were denied on the basis that the death that gave rise to the claim was due to a non-accidental cause.
Okay, yes.
And the other 2 were denied on the basis that the policy's drug and alcohol exclusion cause was enlivened.
Yes.
So does that suggest to you that there might have been a poor understanding of both the definition of accident and the exclusions under the policy?
It's hard to tell from that data, Miss Orr. There could be a number of reasons. When somebody dies, it's not uncommon for the estate to send in requests or claims without actually reviewing it. It could be misunderstanding of the policy, but it could be a number of reasons.
So of those 55 claims, 5 were withdrawn before they were determined by Freedom,
Yes,
and all 5 of those claims were withdrawn because the claimant told Freedom that the death which gave rise to the claim was due to a non-accidental cause.
correct.
All right. Now, the final position expressed by ASIC about accidental death policies in its recent report was that unless firms can demonstrate that accidental death insurance can provide a benefit to consumers, we expect them to stop selling the product. Are you aware of that?
Yes,
And ASIC said that if firms don't stop selling the product, it would consider the need for more formal action in the future.
yes,
And there's a reference in the report to ASIC suggesting that if necessary, it will use its current and or proposed future powers, including product intervention powers, to intervene.
correct.
So just so I understand the situation correctly, as a result of the decision that was conveyed to the Commission yesterday, Freedom intends to keep selling accidental death policies through inbound calls.
Yes,
It will not sell them through outbound calls.
correct.
And on the inbound calls, how does Freedom propose to demonstrate to ASIC's satisfaction that the policies provide a benefit to consumers?
Inbound calls, Miss Orr, are very different to outbound calls in that the customer has generally researched and has requested information on it. I concede that we need to get better at the exclusions and explaining those to them. So we'll review that process to make sure that the appropriate information is being given. They will be sent the information, and if necessary, we'll look at a 2-stage approach for that, a 2-stage sale. Which
What
is
do you mean by that? Sorry.
one of the recommendations from ASIC is a 2-stage sale. So if it was in that particular case with accidental death, then we could review that.
So are you considering adopting the 2-stage sale recommendation?
No, we're looking at reviewing everything and all options at the moment, but we haven't reached a decision.
Is that one of the options you're considering?
It could be an option, yes.
Right, but you haven't yet made a
No, that's
decision
correct.
about how you're going to conduct your inbound sales
that's
of
correct.
accidental death products.
Correct, for
But
accidental
at this
death.
stage, you are planning to continue to offer that product.
Correct.
Okay. Now, I want to move on to asking you some questions about how Freedom ensures that it's dealing appropriately with vulnerable people when it's making sales or attempting to make sales to those people. You tell us in your statement that you have carefully listened to the audio recordings of the telephone conversations that led to the sales of the policies to Mr. Stewart's son.
I have.
And you tell us in your statement that those calls do not make for comfortable listening.
Agree.
And you accept that Freedom should not have sold those policies to Mr. Stewart's son.
Definitely.
And you accept that the sales agent who sold those policies didn't meet the fair dealing standards and conduct that Freedom expects and requires of its staff.
Agree. I do. Yep, agree.
Do you accept that in selling the policies to Mr. Stewart's son, Freedom engaged in unconscionable conduct?
I don't know if the legal term, if that's the appropriate one. Do I think that the individual knew what he was doing? Yes, I do, and I think it was inappropriate.
When you say he knew what he was doing, what do you mean by that?
Well, I think he knew that that person was not capable of understanding Mr. Stewart's son was not capable of understanding what he was telling him, and he should not have been sold the product.
And you say his conduct was inappropriate.
Absolutely.
It was deeply troubling conduct,
Deeply
was it
troubling.
not,
It was.
Mr. Orton?
Yes.
And you tell us in your statement that Freedom has implemented a number of improvements to its customer sales and quality assurance processes since that time.
Yes.
But despite those changes, Freedom has continued to receive a significant number of complaints about its treatment of vulnerable customers, hasn't it?
It has received some, but I'd like to also just go back on actually when the vulnerable customer training and some of these things were put in place. The first vulnerable customer training was put in place in February 2017. It was updated again in December 2017, and then again in March 2018 to make sure that it provided some more practical guidelines on how to deal with vulnerable customers. And then again in August, there was some more work done and on how to practically deal with vulnerable customers when you come across them. It's quite a difficult thing to do in some instances to determine whether someone is vulnerable. In the case of Mr. Stewart's son, that should not have been difficult at all.
It wasn't difficult there, was it, Mr.
No,
Orton?
it wasn't. Not in my view. That was quite obvious. Whether the agent had been given sufficient training at that time, I don't believe they were. I think they would be today. But regardless of that, that should never have occurred, that sale.
So Freedom had no training in relation to handling vulnerable customers before February 2017.
Not specifically for vulnerable customers, no.
Why not? Isn't that an important part of an outbound sales model?
They were informal, from my understanding, that they were informal guidelines in terms of ensuring that people are understood, but there was certainly nothing that was determined to be vulnerable customer policy or training in place before that time.
What was the nature of the informal guidelines?
It could be a range of things that they may encounter on the phone. It could be people under illicit substances. It could be people who have English as a second language and don't understand what's happening. It could be people with intellectual disabilities, a range of things, but it was not documented well enough in my view.
And what were the guidelines, whether they were documented or not, what were the guidelines about how to deal with those people?
To try and deal with the call, and if necessary at the time, escalate it to their sales manager or send out the information.
Now, how do you know that those were the informal guidelines, Mr. Orton?
I was advised by the head of marketing.
And again, they weren't in a document?
No, they weren't.
Why not?
I don't know. That's all.
So the head of marketing told you that these were things that were informally said to sales
Yes.
agents at different points in
Correct.
time. Is that what happened?
Correct.
Was
That's
that
what I'm
good
advised.
enough, Mr. Orton?
No, that's not good enough.
All right. Now, could I ask you to look at RCD 0001 0089 0022? Now, this is a response from Freedom that was given to the Commission in August, a response to a letter asking Freedom to identify any instances of misconduct or conduct falling below community standards and expectations since the 1st of January 2013. Are you familiar with this document?
I am, Miss Orr.
So we see that it's a fairly lengthy table that runs for a number of pages. And if we start with this page, 0022, we see that the first entry, and just so that we understand the way the table works, Freedom has elected to assign the letters CS or M to each of these entries in the far left column, CS meaning that the conduct fell below community standards and M meaning misconduct.
Correct.
So we see that the second entry there is an early incident that led to a complaint, which was identified on the 16th of October 2013, and Freedom acknowledged that there was misconduct. There was a complaint about a sales agent trying to contact the complainant's disabled brother and attempting to sell the brother insurance.
Correct.
So that's an early example of conduct similar to what we see through Mr Stewart's evidence today. You acknowledge that that occurred on this occasion as well and constituted misconduct.
Yes, I do.
And if we move to 0024 and we look at the fifth entry on that page, we see that that entry relates to the sale of the policies to Mr Stewart's son. Is that correct?
Correct.
And Freedom also acknowledges that that constituted misconduct.
Correct.
And if we move to 0025 and we look at the last entry on that page, we see that this relates to an incident that led to a complaint more recently on the 13th of February 2017. The complaint was made by the mother of a person made on behalf of her disabled son. And if we bring up the following page, we'll see the full entry. Policy was cancelled and full refund of the premium was made. So this was another instance after the sale of the policies to Mr Stewart's son that involved the sale of policies to a disabled person whose parent called and complained about that conduct.
That's correct.
And then if we look at the first full entry on this page that we have up, 0026, we see that this relates to an incident identified on the 17th of February 2017. A person who had suffered a stroke had been sold insurance in circumstances where she did not understand the nature of the policies that she'd entered into.
Yes, I see that. Yes.
Now, Freedom did not accept to the Commission that that constituted misconduct, only that it constituted conduct that fell below community standards and expectations. Why was that?
On reviewing the call, I believe it was difficult to understand if that person had had the stroke.
Difficult to understand
Difficult to determine if...
whether the person had had a
Yeah.
stroke.
Yes, I believe so for that one.
Right. And is that reflected in the language that we see there, who may not have understood the nature of the policy she'd entered into?
Sorry, I don't understand the question.
Sorry, is that uncertainty that you have about whether the person had presented in a way that revealed that they'd suffered a stroke, reflected in the assessment that this was a person who may not have understood the nature of the policy she entered into?
I agree. Yep.
Right. But if there was any doubt about whether she understood the nature of the policies she's entered into, that would be highly problematic, wouldn't it?
Yes.
But you chose to characterise this as conduct that fell below community standards and expectations.
Yes.
And then if we turn to 0028 and we look at the fourth full entry on that page, we see that it relates to an incident identified in November last year. A complaint was made by the brother of another disabled policyholder about the sale of the policy, and Freedom acknowledged that this sale involved misconduct.
Correct.
Now, in a covering letter that came with this table, which, are you familiar with that covering
Yes, I am.
covering letter? Freedom also acknowledged that as a result of this incident, I'm sorry, I'll make sure I get this right, that the policyholder had also made a number of unsuccessful attempts to cancel their policy. Do you recall that?
Yes, I do.
Yes. And in the table, you explain that as a result of this particular incident, a decision was made to update the vulnerable customer training.
Correct.
So that's customer training that you've told us now was introduced in February 2017
Yeah.
and updated in December 2017 as a result of this complaint.
Yes.
Is that right? And what were the nature of the updates that were made as a result of this complaint?
I can't remember the detail between all of the variations, but there was more practical advice in dealing with and identifying the issues.
Why didn't you create some vulnerable customer training after the incident involving Mr. Stewart's son in June 2016?
Sorry, I don't know. I don't know why that wasn't done.
Okay. But you do know that as a result of this November 2017 incident, the training was updated.
Yeah.
And then if we turn to 0031, there's another entry that's split across 2 pages. The last entry there is from the 3rd of April this year. The policyholder sought a refund of premiums of a policy she did not remember purchasing due to her health conditions. Freedom agreed, and over the page we see, to refund the first premium. That's another sale that Freedom acknowledged fell below community standards and expectations.
Yes.
And then can I ask you to look also at 0032, the 5th full entry. Do you see there, the complainant contacted FOS on behalf of the policyholder. This was on the 26th of April this year. Complainant contacted FOS on behalf of the policyholder, who is her mother. 29 lives were insured. The complainant requested that Freedom refund premiums. Now, that is acknowledged to be conduct that fell below community standards and expectations, but not misconduct. Why?
I've listened to this call a number of times. There'd be no indication on the sales call that they were vulnerable at all. I don't think it's appropriate for 29 people to be covered. I think that was a failure of processes by the company, and it shouldn't have allowed that to happen. The customer was asked if it was affordable, and the team leader did ask if it was affordable. But regardless of that, I'm not justifying it, because no one should ever have 29 people put on their policy.
Do you know why this happened?
I don't know exactly why, because I don't know what was in their mind at the time, but I'm assuming that it was because they wanted to continue to get additional lives on that policy.
And therefore maximise their commission?
At the time, I think that would be correct, yes.
All right. So these are some examples. I've just pointed to a few of incidents, both before and after the sale of the policies to Mr. Stewart's son,
Yes.
that involve vulnerable customers and in which Freedom acknowledges its conduct either fell below community standards and expectations or constituted misconduct.
Yes.
Is this too many? Is this too many incidents of this nature for Freedom to be having?
One's too many, really. One of the issues, apart from the vulnerable customer training, is that there wasn't sufficient QA, quality assurance coverage, during the time. I believe that's been rectified for sales. We do aim to have 100% of all calls go through a listening where they're rated. It's not always reached. But it's very close to that. In the last, since I've been here, I think it's averaged higher than 95%. And that's, I believe, industry leading, to be listening to every sales call.
Why is it not always reached?
It's not always reached because there are fluctuations in sales, and we do go back on them when the QA agents have some spare time, but it can vary, 94.5 to 98.5. I just want to be clear that it's not always 100%.
And when did you start that process of aiming to listen to 100% of the sales calls?
The process was started last year, but it wasn't achieved. It was certainly achieved, and it was one of the key things that I wished to do when I came to the organisation, because I think it's a double check, and it's very important from a customer perspective. So we were certainly within the 90s, I believe, from April.
From April this year is when you started to achieve or substantially achieve that goal.
Yeah.
All right. I tender the table of acknowledged misconduct and conduct falling below community standards, Commissioner.
Freedom's response to Commission request of 3 August 18, RCD 0001 0089 0022, Exhibit 6.72.
And I will tender for completeness the cover letter that I referred to and asked you a question about, which is RCD 001400470001. It's a letter dated 24 August 2018 from Mr Orton to the Royal Commission.
Letter of 24 August 18, Freedom to the Commission, RCD 001400470001, Exhibit 6.73.
Now, Mr Orton, last Tuesday you told ASIC that Freedom would be filing a breach notice which related to specific issues arising from some customer complaints. Is that right?
Correct.
And you told ASIC that the issues related to a set of complaints that had been provided to ASIC and the Royal Commission.
Correct.
And you provided that breach notice to ASIC last Friday,
Correct.
and part of the breach notice related to 5 specific complaints that had been made to Freedom, including the complaint made by Mr Stewart about
Correct.
his son. Is that right?
That's correct.
And 3 of the other complaints that you notified to ASIC as part of this breach notice were complaints that I've just raised with you relating to vulnerable customers.
Yes.
Is that right?
Correct.
And the final complaint that you notified to ASIC was a complaint in relation to downgrading sales conduct. Is that right?
Downgrading to accidental death.
That's right.
Correct. Yeah.
Now, can I take you to that breach notice, which is ASIC 0073 0001 0001. Now, can I ask you to look at pages 0003 and 0004? We see a table listing the complaints. And we see under the table on the right-hand side, 3 paragraphs down, having regard to the personal circumstances of the customers, Freedom Insurance has formed the view that when taken together, the conduct of the sales agents in connection with the sales calls constitutes a potential breach of section 912A1A, 912A1CA or 912A1F of the Corporations Act.
Correct.
Now, they are the provisions of the Corporations Act that require holders of AFSL licences to do all things necessary to ensure that the financial services covered by the licence are provided efficiently, honestly and fairly,
Correct.
to take reasonable steps to ensure that your representatives comply with financial services laws,
Correct.
and to take all reasonable steps to ensure that your representatives are adequately trained and are competent to provide financial services.
Correct.
So on that basis, you have issued a breach notice last Friday to ASIC explaining that you believe that these 5 calls demonstrate potential breaches of those sections.
Yes.
And does Freedom also accept that some, if not all, of these complaints that were made in respect of vulnerable customers referred to in this table involve unconscionable conduct on the part of Freedom?
I'm not sure. Like I said this before, so I'm not a lawyer. Do I think that some of these individuals potentially acted unconscionably? Yes, I do.
And I want to take you to the last part of the letter, but before I do that, can I ask you to explain why you think Freedom has had these sorts of issues with mis-selling to vulnerable customers?
My disappointment, I don't think you can ever stop all sales to a vulnerable customer, but I'm disappointed that the company did not pick this up. And I think that's a result of the QA. I think over that period of time, given the number of calls that are made, that it's not surprising that there were a few. Disappointed in the individuals that made those calls. I'm disappointed that the sales training prior to February 17 wasn't strong enough, but I can't explain why they came through.
Well, in the breach notice, we see from 0005, under the heading Preventative Action, Freedom recognises a link between its remuneration structures and the mis-selling to vulnerable customers, doesn't it? Do you see the last dot point there? In order to prevent similar occurrences from recurring in the future, Freedom Insurance has taken a number of steps, including implementing various changes to its remuneration structures for sales agents, including the removal of commission-based remuneration with effect from the 1st of October.
Correct.
So you accept that the remuneration structures you had in place were a driver of this behaviour?
My view is that any commission payable by a sales agent has the potential to be conflicted. Doesn't matter how big, how small, it has the potential. So that's why the decision was made to eradicate commissions. So yes, I do.
I tender the breach notice, Commissioner.
Freedom, breach notice 7 September 2018, ASIC 0073 0001 0001, Exhibit 6.74.
I want to turn to asking you some questions about the remuneration structures, Mr Orton, and I'll ask you about the model that you're proposing to move to from the 1st of October. But can I start with how you presently remunerate your sales staff for selling insurance policies? What's the model?
At the moment, and I'll talk about the final expenses product, which is the main product, they receive a flat fee. It's independent of lives or value of the sum. That's an amount of $50. They then must cover their expenses. Their expenses include the value of their wage, the value of the lead that they have used, given that lead costs vary quite dramatically. They then have an unfortunate term called wastage, which I don't like, which includes compliance fails, which is subtracted, and other QA fails that come through. Their commission is then multiplied by an average, an agent quality rating score, and then by an average QA score, and that determines their commission.
Very complex commission
complex.
structure, isn't it?
Yes, it is.
I want to ask you some more questions about it, but can I just look a bit further back in time and see how you've changed the commission structure? Because from 2013 to 2015, you paid your sales agents volume-based commissions, didn't you?
Yes.
Initially, sales agents had to sign up 20 new funeral insurance applications before they were eligible to earn a weekly commission.
That sounds right, yes.
And then it moved to you had to sign up 30 applications a fortnight, so it reduced down a little.
Yes, that sounds right.
And if you met the minimum number of applications, you were eligible for a policy commission that was calculated by reference to how many people you'd signed up.
Correct.
And the amount that the sales agent received increased the more people you signed up.
Yes.
And from April 2014, you could also earn an additional lives commission if you covered a minimum of 50 people in a fortnight.
Correct.
And that was an additional amount that you were paid on top of the first layer of commission. Is that right?
That's right. I believe that's right.
Then from 2015, Freedom started making structural changes to the commission model.
Yes.
And it introduced this commission multiplier that you just referred to? Or is that a different form of multiplier?
The commission multiplier is different, yeah.
Can you explain the commission multiplier?
Yeah, the commission multiplier is was in 2015, depending on the number of sales that you had, you got a higher commission.
I see. And I think we see from your statement that it ranged between 60 and 200% of total commission amount achieved each fortnight.
That sounds right.
Yes, and in June 2015, the upper limit was increased to 250%.
Correct.
And what was the purpose of the commission multiplier?
To encourage sales.
Now, in June 2015, for the first time it seems, Freedom changed the commission model so that any new applications which were marked as a failure during quality assurance checks were not considered for assessing commission.
Correct.
So prior to then, there was no quality assurance component in the commission
Right.
structure. Now, then in January 2016, at the beginning of the year in which Mr Stewart's son was sold his policies, Freedom began to introduce measures that were designed to recoup from the sales agents the cost that Freedom incurred by employing them.
No.
No?
No, not to recoup the cost. The sales agent was never required to pay Freedom anything.
No.
But it was. They certainly had to cover the cost of their seat.
Yes, they
and
couldn't.
the cost of their lead. That's right.
They started in the negative, didn't they,
Yeah.
Mr Orton?
Yes,
And
they
they
did.
couldn't earn commission until they'd earned enough to cover the costs of Freedom having them there selling the policies.
Yeah, the cost of their salary. That's right.
There were two main components to that, weren't there? There was something called a seat cost.
Yes.
Can you explain what a seat cost is?
Yeah. The seat cost is their salary. So 37.5 hours times whatever their salary is.
Why did Freedom introduce a seat cost?
It's really not necessary apart from one thing, and that it encourages. One of the big issues in a contact centre is people actually turning up. And if they know they've got to turn up, then to cover their seat cost, then that assists. But that's the only reason for it.
But they start from behind again, don't they? Because they have to make enough money for Freedom to cover their seat cost before they can start earning their own commission that they can take home.
Well, I wouldn't say they start from behind because they're paid a wage, but once they cover that wage, they can make commission.
I see. There was also a cost per lead attempted,
Yes,
and that was deducted from the sales agent's commission.
yes,
Can you explain what that was?
yeah. That's it. The cost per lead, leads that are provided to any company vary in quality. Someone who's chasing down a product, generally the lead provider will charge more. And it's only reasonable that if that particular agent is using all of the very good leads, that they should pay a higher amount for that lead.
What are the very good leads?
Someone going to a website and searching and asking for a callback is a very good website. There has been in the past some live transfers where people have said, I'm very interested and I want this product. It varies.
So the greater the certainty that the customer had indicated a willingness to buy the product, the better the lead was.
That's right.
And the greater the cost that the agent had to incur in connection with having
it
that
was in the
lead.
calculation. Yeah, that's right.
Well,
That's
the
right.
greater the amount that was going to be deducted
Yeah.
from the commission that they
Yeah.
made at the end of the day.
Yeah.
And what were the inferior leads? What's a poor quality lead?
Look, none of them should be poor quality. They're just varying qualities. And the high quality leads for the company cost the company a lot of money.
And how do you pay for those leads?
Paid directly to the lead provider.
Yes, so you pay a third party for the customer's information.
Yes.
Yes.
On many occasions. There are other occasions, Ms. Orr, so there are customers that come through the website or through other, but predominantly it would be through lead providers, yes.
Yes. And are you able to give me any more information about what a lower quality lead would be?
Look, they do vary, the costs. A lower quality lead might be someone who, in the past, has had filled out a survey and requested to get information sent to them, or requested a call from Freedom, for Freedom to call us back, but it could be multiple companies that they've requested that for.
I see. Which
That would be the cheaper ones.
means you have less certainty that they're interested in your products.
Yeah.
Yes, I see. So by introducing those two costs for the agents at the start of 2016, the seat cost and the cost per lead, Freedom was trying to shift some of its costs of doing business onto the sales agents.
Not really, because the starting point was relatively high, the amount they got in what we call seating credits. The seat cost was there to encourage them to go to work. That was the main reason. And the other cost was to make sure that it was fair to all of the agents in that if they were going to utilise better quality leads, that they paid for those better quality leads. So those two components weren't.
Knowing that those two costs were going to be factored into the calculation of your commission as a sales agent,
Yes.
increased the chances that the sales agent was going to engage in aggressive sales practices to try and make more sales and cover those costs, didn't it?
I think it can increase the possibility that a salesperson will be pushier. Yes, I agree.
Because they need to sign people up to policies in order to cover those costs and still emerge with what they regard as a satisfactory commission at the end.
I don't think it's the covering of the costs. I think it's the fact that there's a commission payment, is my personal view, which is why I've been very keen to get rid of commissions.
At the same time that Freedom introduced those two costs, the seat cost and the cost per lead, it attempted to recalibrate the commission structure more generally. Do you agree with that?
Yes.
It removed the requirement for a minimum number of applications to be written in order to be eligible for commission.
Correct.
And it expanded other parts of the commission structure, including by allowing sales agents to earn commission on the accidental death and accidental injury policies.
That's right.
But it also expanded the circumstances in which early policy cancellations could be factored into the commission. Is that correct?
Yes, I believe so. Yes, it was. Yeah.
So that was the structure that was in place when a Freedom sales agent sold the policies to Mr. Stewart's son in the middle of 2016, that no commission was payable until the seat costs and the lead costs had been recouped, and a commission was payable on accidental death and accidental injury benefits.
Correct.
And the commission that a Freedom sales agent could earn at that time and today is uncapped.
Correct.
And that has been and remains something that Freedom emphasises in recruiting its sales agents. Do you accept that?
I accept that was the case, but it's certainly not now.
It was the case as recently as last week.
Yeah, I
You
saw that as well.
accept that?
I do.
Yes, so as recently as last week you were advertising for people to join your business on the basis that they would be rewarded with uncapped commissions.
I didn't know that, but yes, it was. I agree, and that was the website, and I didn't realise it was there. If I'd have known that was there, it wouldn't have been.
It's been there, that sort of
I know.
advertising for a long time, hasn't it, Mr. Orton?
It has, but it's been in the last few months. I've had a focus on that.
All right. Then going back in the chronology, we're at your 2016 changes. That's what
Yeah.
I've been discussing with you. And then in the middle of 2017, last year, there were further changes to the commission model. And as I read your statement, the principal change was that the entitlement to and calculation of commission was based on what you describe as a form of balanced scorecard approach.
That's right.
So eligibility for a commission and the amount of the commission was, and still is now, determined by a particular formula.
It is, yes.
Yes. And that formula is set out at paragraph 95 of your statement, and it's also dealt with in an exhibit to your statement, which I'll ask to be called up, FIG 0002 0005 0034. So that's the formula.
Correct.
Commission equals revenue minus expenses minus wastage times agent quality rating times quality assurance average factor.
Correct.
Now, this slide relates to the Freedom Protection Plan sales team.
That's right.
And as of quite recently, it's the same formula and structure for the life products sales team.
Yes, it is.
Yes. Now, can I just ask you about some aspects of this formula? If we look at revenue, you say in your statement that the revenue component is seeded based on the level of sales made by the sales agent. Can you explain what you mean by seeded?
Yeah, sure. In this model, if for the first policy that they get, it's the upfront amount that they would get, which is $80 in this example. If they get a second life on the policy, they get a further $20. So if they put their spouse or put someone else on, it's another $20. And then another $10 for every additional life, could be their children or could be whatever else it may be, on the policy. And then for every AD or accidental death or accidental injury benefit, they get an additional $5 per on each life sold.
So the seeding credit for these products, the Freedom Protection Plan products, was initially, as I understand it, based on a flat rate for each product sold, each policy sold, and for each additional life insured under the policy.
Correct.
And the seeding credit for the life products was based on annualised premiums.
That's right.
But as of about a month ago, the seeding credit's now a flat rate across both of them.
That's right.
Now, if we turn to expenses in this calculation, Freedom deducts from an agent's seeding credits two things: the seat cost
Yes.
and the total aggregate cost that Freedom has allocated to the leads provided to the sales agent,
It's, the leads where they're able to make a contact.
where they've made contact.
Yeah.
And a sales agent's only entitled to commission if they have accrued seeding credits in excess of their seat cost and the cost of their leads.
That's right.
And there's then the reduction for wastage, which you referred to earlier.
Yeah.
What does wastage mean in this context?
Like I said, I don't like the terminology, but it's fails, QA fails. It's data capture errors where they've put in the wrong information into the system. It's any benefits that were cancelled within 6 weeks. So if a customer decides to cancel. And IPscape and EBIX wrapping is just the dialer and how they wrap the call as at the end of it as closed.
What does that mean, to
Completed,
wrap the call?
It's just a wrap code, so they decide that it's answering machine, it's whatever else it may be that they've used.
So can the wastage reduction lead to a total loss of the seeding credits for a particular sale?
Over the last month, it can, but prior to that, no. And the reason it can is that compliance fails, and which we've improved, have a deduction of 16 points on some key ones. 2 of those in any 20-day period would result in the commission being void for that entire period.
So over the last month, compliance fails have been introduced into the analysis.
Well, greater compliance fails.
Yes.
There was always compliance fails, and greater penalties for them.
Greater consequences for a
and greater
compliance
penalties.
fail. Now, if the result of the revenue minus the expenses minus the wastage is a figure of 0 or less, then no commission. Is that how
Correct.
it works? But if the figure's positive, then there's an amount of commission to be paid which can be increased or decreased depending on the factors in the second row. Is that right?
That's right.
And the first of those is the agent quality rating.
Yeah.
Can you explain what that is?
Yeah. This is a mark that the agents get by the quality assurance agents, and it's more about how the customer was dealt with by the agent in terms of demeanour, Were they listened to? Their questions listened to? Was it a good customer experience? That's a rating. There's 5 questions given. It's a rating out of 10. And then that becomes their AQR.
So this is a factor that can allow a sales agent to earn a premium on their commission, is that right?
It can.
And it can allow a sales agent to earn up to 200% commission on their sales.
If they got every single score perfect over the entire time, they could earn 200%. You're correct.
Yes. Now, if their agent quality rating is within 5 points of the average agent quality rating, then they get 100% of their commission.
Correct.
So a high agent quality rating results in a positive multiplier and an increase in commission, and a low agent quality rating results in a reduction in commission.
Correct.
And the second multiplier is the quality assurance average rating factor. I'm sorry, average factor, it's described as. Can you explain what that is?
Yeah, this is the quality assurance assessment score. So in the example that I gave before, and this is a more recent change, but for any indication of any level of pressure selling, they would lose 16 points from a 100-point start. They would be ineligible for the commission on that policy. The average is over a period, over the period of the commission, which is usually a week, and then it's multiplied, and it either increases or decreases commission payable.
So this is an average of the quality assurance scores that are assigned, is that right?
It's an average for that agent.
Yes, and that score reflects whether quality assurance have decided that the agent has met regulatory and compliance and process requirements in making the call.
Correct.
And it starts at 100%, that
That's
score,
right.
is that right? And deductions are made for each issue detected. And is there a point at which the score drops to a percentage that means that the call has failed the quality assurance process?
85.
85. Now, we see from your statement that the effect of this factor seems to be that if a sales agent has an average quality assurance score of 79% or less, the multiplying factor is 0. Is that right?
Correct. Is that on the quality rating?
Is that on the quality rating or the quality assurance average factor?
I'd have to see it. Sorry, Ms. Orr. I mean,
It's-
I agree with you, it's quite complex.
It's very complex, Mr. Orton. If I could just ask you to look at paragraph 108 in your statement at FIG 0003 0003 0022. Ask you just to read that paragraph 108, which is under the heading Quality Assurance Average Rating.
Yeah, that's correct. Under 80%.
So the proposition I put to you is correct?
You're right.
Okay. So if you get a high quality assurance average rating, you get a positive multiplier again.
Correct.
And that increases your commission.
Correct.
All right. Now, there are other factors outside of that formula that also bear on the sales agent's commission.
Yeah, there can be.
Yes, Freedom can apply penalties or fines.
Yes.
And they're effectively a reduction in commission. Is that right?
Yes,
And they're at the discretion of the head of sales.
they are.
And you tell us in your statement that previously a sales agent's entitlement to commission has also been subject to the discretion of the head of sales.
Sorry, can you say that again?
You tell us in your statement that it has previously been the case that payment of the commission is subject to the discretion of the head of sales.
Yes.
But there was no policy document that governed or in any way explained how that discretion was to be exercised.
No, I agree.
Why not?
It should have been there. I agree.
You say that even though there wasn't any formal documentation, typically the head of sales refused to give someone their commission where there had been gross misconduct, poor sales practices, poor professionalism or material non-compliance.
Correct.
So what sorts of conduct has led to the head of sales refusing to permit a sales agent to get their commission on the basis, for example, of gross misconduct?
I am aware of a couple. On gross misconduct, I think there was an occasion where someone was sold an AD policy, and they was not made clear that it was for accidental death, and the agent was fined all of that commission, all of his commission for that. Believe there's some other in the information that we provided where they were fined for various things, including not call wrapping, which is the other stuff, which is a minor issue. But my honest view, Ms. Orr, is that the company has not been hard enough on its sales agents in doing this.
And the instances where the discretion has been exercised to withhold a sales agent's commission have been few and far between. Do you accept that?
Yes, I do.
But you say that there are now formalised and specific qualification requirements for sales agents, and where a sales agent now fails to meet one of those criteria, that's intended to result in them being excluded from the incentive scheme. Is that right?
If they fail to, in a period, two of those, then they would be excluded for the entire period. There's also the sales agent disciplinary policy that we've been working on, but we need to be tougher.
And is that going to happen?
Going to happen with me.
Now, having introduced that formula-based commission program in July 2017, about 15 months ago, there were further changes made to the commission program to increase the base salary and reduce the variable remuneration. Is that right?
That's right.
But the variable remuneration has remained uncapped.
At the moment, correct.
And I want to put to you that the practical effect of the remuneration frameworks that you've had in place for the last 5 years is that sales agents have been able to substantially increase their remuneration through commissions.
Yes, they have.
And the average proportion of remuneration for both Freedom Protection Plan sales agents and life insurance sales agents that has been attributable to commissions has been 32%.
I don't think you can add those two numbers together. I think it's 24% for the Freedom agents and 40% for the life.
How about I take you to a particular year? In financial year 2016, we see from paragraph 117 in your statement,
Yep.
which is slightly further in, it's at 0024.
Yeah.
So in 2016, it was 32% for both of them.
Sorry, 2016, correct.
And for this year, it's 24% variable remuneration for the Freedom Protection Plan agents and 40% for the life insurance agents.
Sorry, you're right.
I think that's what you were referring to.
Yeah, that's right.
Now, so the average proportion of remuneration for those who sell life insurance at Freedom has increased.
On small numbers, yes.
And I want to also put squarely to you that the commission structure that you've had in place in recent years has created a situation where your sales agents have been incentivised to aggressively pursue sales.
I agree. I think all incentives have that effect.
And that was likely to and has in fact led to poor customer outcomes.
I think it can lead to poor customer outcomes. Not on every occasion, but we've got some examples here today, which I can only apologise for.
Where it has?
Yeah.
And yesterday, as part of the information that was given to the Commission at 3 o'clock, we were told that Freedom would be ceasing commissions for its sales personnel from the 30th of September.
Correct.
And we saw the decision, the record of that decision in the minutes I took you to earlier this morning.
Yes.
And if I could just take you back to that document to look at that part of the decision again, if I could take you to FIG 0011 0001 0001 at 0005. And if we could perhaps have 0005 and 0006, 0011. I apologise if I gave the wrong number. 0011 0001 0001, and I want to go to 0005 and 0006. And we see the resolution that was made at 0006, the board resolved. That was what you took me to earlier in answer to a question I put to you about where we see the decisions in this document, Mr. Orton.
Yes.
And if we look at the description of the discussion prior to the resolution at the bottom of page 5, we see in the second paragraph, about 4 lines down towards the end of the line, this initiative will remove in its entirety, I think that should be entirety, any potential for the variable incentive component to inappropriately influence the conduct of the sales or retention agents, whether this influence be actual or perceived. Its removal is consistent with the principles set out in the ASIC review regarding conflicted remuneration.
Correct.
So recognition in this set of minutes of the meeting of the board that the commission structure that you've had in place had the potential to inappropriately influence the conduct of sales agents.
I agree.
And that has been the primary reason for its removal. Is that right?
Correct.
Thank you. Now, I want to take you back to the breach report that you provided to ASIC on Friday last week. ASIC 0073 0001 0001, because there were other aspects of that breach report that went beyond the complaints about the vulnerable customers that I took you to earlier. If we turn to 0002 in this document, we see that Freedom there told ASIC, I'm just going to, find the relevant part. In the paragraph that starts therefore, 2 paragraphs from the bottom, therefore, under the heading, I should say, remuneration arrangements for representatives, and there's some information about that, with effect from 1 January 2018, Freedom Insurance's remuneration arrangements for its representatives were structured on the basis that variable monetary benefits given to its sales agents were within the exemption from the ban on conflicted remuneration as set out in a particular regulation in the corporation's regulations.
Correct.
And in April 2018, we see in the next paragraph, Freedom commenced a detailed review of the balanced scorecard framework to enhance its effectiveness. Since April 2018, Freedom Insurance has progressively made a number of changes to the balanced scorecard framework and supporting structures. Then if we go over the page to 0003, we see that Freedom told ASIC that it had formed the view that during the period between 1 January 2018 and May 2018, there has been a potential breach of Section 963 capital E of the Corporations Act in respect of the variable component of sales agent remuneration.
Correct.
So this is another recent breach that's been identified by Freedom to ASIC,
yes,
which relates to the commission structure that you have had in place, particularly in the life of that commission structure post the 1st of January 2008 when the life insurance framework regimes came into place.
Correct.
Thank you. Now, I'll just point out also on 0003 that you emphasised there that Freedom was not aware of any consumer detriment, financial loss or other damage arising to customers as a result of the potential breach, but that you had determined in the interests of full and frank disclosure that it was appropriate to report the potential breach to ASIC.
Correct.
All right. So no commissions from the 1st of October this year, but serious problems with the commission structure that was in place prior to that time, both in terms of incentivising poor sales agent behaviour and in terms of non-compliance with the law since the 1st of January this year.
I think that's right. I think structurally the balanced scorecard was trying to do the right thing in terms of the quality assurance and the quality rating, but I think it fell short.
And Freedom has offered for some time incentives beyond commissions for its sales agents, hasn't it?
It has.
Over time, there have been a number of different types of incentive campaigns for Freedom staff.
Yes.
Some are one-off schemes.
Yes.
Some are run more regularly.
Not very regularly. I mean, there might be a dinner or something, but I wouldn't say that they're very regular.
Sometimes the purpose of the incentives has been to specifically and deliberately drive sales. That's your language from your witness statement at
Yes.
paragraph 141.
Yeah.
Can I show you FIG 0005 0012 0013? Now, this is one example of a relatively recent short-term incentive that was intended to specifically and deliberately drive sales.
Yes.
This is an email from the 14th of July last year to the sales team.
Yes, it is.
Hi all, I feel like giving a bit of money away. It will run from now until close of business tomorrow. Oldies, anyone that gets 8 funeral lives or more will go into a draw on Monday morning. Newbies, anyone that gets 6 funeral lives or more will go into a draw on Monday morning. Every life over your target, you will get a bonus entry. $100 to give away, first prize $70, second prize $30, get selling, show me the money. So this was one of your incentive campaigns?
Was.
From last year. And what observations do you have to make about this sales campaign, Mr. Orton?
I think it's absolutely inappropriate. And while that will not happen under my watch.
Do you accept that this was likely to drive highly aggressive and inappropriate sales practices so that people could meet their targets and be eligible for the money?
I do.
I tender that email, Commissioner.
Email 14 July 17 concerning incentive FIG 0005 0012 0013 Exhibit 6.75.
And could I ask that you look now at FIG 0005 0012 0017? This is another example of one of those campaigns from July last year. An email to the Freedom sales team. Morning everyone, we've got $150 to give away in today's incentive. Target is 400 lives by lunchtime. Everyone aiming for 7 lives over the first 2 sessions, 3.5 lives per session, easy peasy, and we'll smash 400 lives to lock in the incentive money for the last part of the day. Also, the draw for Tuesday is coming up. Let's smash it out, folks, and lock this cash money in. Any observations about this campaign, Mr. Orton?
Inappropriate again.
Likely to drive very poor behaviour by your sales agents and to lead to consumer detriment as a result.
Agree, apart from being unprofessional.
I'll tender that email, Commissioner.
Email 20 July 17 concerning today's incentive FIG 0005 0012 0017 Exhibit 6.76.
Freedom also offered substantially more valuable and substantially more elaborate incentives, didn't it?
It did.
And in your statement you say that there was usually a quality assurance requirement in order to qualify for participation.
Correct.
But not always.
Not always.
Can I ask you to look at FIG 0005, 0006, 0007? Now, this was the Freedom Boat Party incentive, which ran from June to July in 2016.
Yes, I believe so.
And if we look at 0009, we see that the Freedom Boat Party offered Freedom employees a 3-hour cruise around Sydney Harbour on a luxury cruiser with a food and beverage package.
Correct.
And at 0008, we see that there were 2 ways to secure a spot on the Freedom boat. One was to win automatic selection as one of the top 12 point scorers. Points were received for hitting each daily expectation, policies, lives or accidental death expectations.
Correct.
And sales agents would lose a point for every quality assurance fail.
Correct.
So this is an example of one of the campaigns that did have a quality assurance component. The other method of entry was a passport draw, which was a second chance draw.
Yes.
I tender this document, Commissioner.
Freedom Boat Party, June, July 2017, FIG 0005, 0006, 0007, Exhibit 6.77.
Now, in contrast to the Freedom Boat Party incentive, there were a number of incentive programs of high value which weren't pitched as being subject to any quality assurance limitations. Do you agree with that?
Yes.
And I'll show you an example. FIG 0005, 0006, 0005. This is an incentive program from November and December last year. It was an incentive campaign offering a trip to Bali.
Yes.
And this was the email which notified staff about the incentive program. Is that right? And we see at the very bottom of the page that the person who sent it was from Freedom's Quality Assurance Department.
I believe he was at the time. He's a contractor.
Was it
that was
not?
looking at some various options for QA. He wasn't a QA operator or dealing with sales staff.
Or was it normal for sales incentive programs to be run through Freedom's Quality Assurance Department?
No, it wasn't. This is an individual who provides some various consulting to the organisation.
And did so as part of your Quality Assurance Department?
He was looking at quality assurance in general.
So he was chosen to communicate the news about the Let's Go to Bali incentive.
Yes.
There are only 27 working days between today and our Christmas break. We want a huge sales result in the run-up to Christmas. So we're going to offer all sales agents an amazing incentive. Today, each agent will be given an individual sales target covering the next 27 days, including today. Every agent that reaches their target will win a luxury 7-day holiday for 2 people to Bali, including airfares, accommodation and complimentary treats. So it's not anyone can win it, it's everyone can win it. Your target is achievable as long as you work hard. More details will be given over the next 48 hours, but we wanted to let you know immediately because every call counts. So your efforts need to start today. Let's all go to Bali. Now, there was no suggestion anywhere in this communication that eligibility was contingent on sales agents meeting quality assurance requirements, was there?
No, there's not.
The message was that sales staff were to sell hard without regard for quality assurance requirements.
That's the message in that communication, I agree.
And that message was reinforced throughout the campaign. I want to show you another document. I tender this communication, Commissioner.
Email, Let's Go to Bali, 15 November 17, FIG 0005, 0006, 0005, Exhibit 6.78.
Could I ask that you look at FIG 0005 0006 0019, and if we could have 0019 and 0020 on the screen. We see that this is an email from December last year. Hi guys, this Saturday, 16 December, is the last free shot Saturday of the barley incentive. Start the morning here with a coffee and Krispy Kreme donuts. Get on the phone and sell, sell, sell with one thing in mind: get to barley. At 1:30 we will break for a Subway lunch, and over the page 0021, at 4 p.m. we will break out the Bintang beers and ciders. Use this last free shot day to get you to barley. Any observations about this communication, Mr. Orton?
I'm as livid with it as you are.
The message was, in freedom's terms, get on the phone and sell, sell, sell with one thing in mind: get to barley.
Inappropriate.
Again, incentivising your sales agents to aggressively sell, leading to situations of customer detriment.
I agree.
Tender that document, Commissioner.
Email last Saturday of barley selling 13 December 17 FIG 0005 0006 0019 Exhibit 6.79.
Then in January this year, there was another barley incentive campaign, wasn't there?
Yes, there was.
And it was again administered by the same person through the Quality Assurance Department.
Yes, he'd organised the tickets and the arrangements. I believe that's why there was an extension. There was tickets left over.
So if we look at FIG 0005 0006 0001, barley, 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 it's on again, another barley incentive. And I won't read through this, but if we could just bring up onto the screen 0002 and 0003. We see again that the key message at the end of this email: get your target and you're in. Yes?
Yes.
Yes, I tender that email dated the 12th of January this year, Commissioner.
Email, it's happening again, 12 January 18, FIG 0005 0006 0001 Exhibit 6.80.
Now, two other higher value incentive programs that ran during this period excluded from sales targets policies which resulted in cancellations from inception, but didn't otherwise exclude non-compliant calls. Now, these were another barley campaign that ran from March to April of this year, and a Vespa scooter campaign that ran from November last year to January of this year.
Correct.
And if I could just take you to FIG 0005 0006 0014. We see an email about the Vespa scooter competition, which again was sent by the same person within the Quality Assurance Department. And this email made clear that sales agents would earn certain points depending on factors that included the type of policy sold, the number of additional benefits taken out, and the amount of premiums written. You see that?
I do.
But beyond that, we see the winner takes all, no handicapping, so you need to be number one to win.
Correct.
I tender that document, Commissioner.
Email, Vespa scooter competition, 24 November 17, FIG 0005 0006 0014 Exhibit 6.81.
Now, you accept that these sorts of incentive programs, particularly the higher value incentive programs, encourage conflicted conduct by sales agents?
Yes.
And do you accept that conflicted conduct is particularly likely in circumstances where no quality assurance qualifications are placed upon participation in the program?
Absolutely.
And you tell us in your statement that Freedom is now changing its approach to the provision of non-monetary benefits because of the introduction of the life insurance framework in January this year. Is that right?
Not only for that reason.
What are the reasons?
It's not only to comply with regulations. I don't believe in it.
You don't believe?
I don't believe in these sorts of incentives. I don't believe in commissions that are sales or retention driven. I think it should be about quality, and I think if you can get the quality right, you can improve consumer outcomes. If you improve consumer outcomes, you can have a profitable business.
Are you aware, though, of the life insurance framework reforms?
I am.
And can you explain your understanding of those reforms?
Yeah, anything that's determined to be conflicted remuneration should not be offered, and this was conflicted remuneration.
So you know when those reforms came into effect?
1 January 2018.
And as part of that same breach report that I've taken you to twice already, the one that was filed with ASIC last Friday, Freedom also notified ASIC that it had breached the Corporations Act in the provision of some of its 2018 incentive programs. Is that right?
Correct.
If we just go back to that breach report at ASIC 0073 0001 0001 and turn again to 0002. We see under the heading non-monetary benefits for representatives that in August 2018, this is what Freedom told ASIC, Freedom formed the view that certain non-monetary benefits comprised of reward-focused travel and vehicle incentives, are we referring there to the Bali trips and the Vespa scooter
Correct.
campaign, given to representatives during the period from the 1st of January 2018 to April 2018 fell within the scope of the presumption in section 963L of the Corporations Act regarding volume-based benefits.
That's correct.
And Freedom told ASIC that it had determined that the travel and vehicle incentive awards given to representatives in that period constituted conflicted remuneration and that there had therefore been a breach of 963E of the Corporations Act.
That's right.
And again, Freedom emphasised over the page that it wasn't aware of any consumer detriment, but had determined in the interests of full and frank disclosure that it was appropriate to report the breach.
Correct.
Now, you may not have been able to identify consumer detriment, but you agree with me, I think, you already have, that running campaigns like this is likely to result in consumer detriment.
I think it can result in consumer detriment, I agree. If the salespeople are too pushy and driving towards those incentives.
And these incentive programs were encouraging them to behave in that way, weren't they?
Yes.
Now, in the meeting that Freedom had with ASIC on Tuesday last week, which I referred to earlier, ASIC asked you whether inappropriate behaviour had occurred at Freedom because of these incentive schemes. Do you recall that?
I don't recall that particular part, but if that's within the notes, then yes.
The notes of that meeting suggest that you said you'd take that question on notice, or someone within the meeting, possibly not you, another representative of Freedom may have said that that question would be taken on notice.
Probably me.
And I just want to understand whether Freedom's statement in the breach report that it's not aware of any consumer detriment represents Freedom's final position on that point.
We're not aware at this stage. If we're talking about some of the issues that we've had today in terms of the reports and the misconduct, we're not aware of any of those cases where we haven't acted and refunded premiums or remediated, but I can't guarantee that they're not out there.
All right. Now, I want to turn from that discussion of remuneration and incentives, Mr Orton, to just discussing in a bit more detail the quality assurance processes that have been in place, which you've conceded already were inadequate. Is that a fair assessment of your evidence today?
There was inadequate coverage. I think it's important to get the QA coverage rates up around that 100% mark for sales. But I think in general the QA structures, although they can always be tweaked and improved, are quite strong. They're quite detailed. The QA marking guidelines are relatively strong.
Do you think they've always been strong when you look back at the marking guidelines over the last few years?
I think they're picking up the right things in general. I don't think that the consequences of picking those things up has been strong enough.
So back in 2016, when the policies were sold to Mr Stewart's son, only some of Freedom's calls were being assessed against the marking guidelines. Is that right?
Correct.
Do you know what percentage of calls were being assessed at that time?
I don't know the percentage for 2016, but I know the percentage for beginning of 2017 to up until June, which was 42% of all calls.
But back in 2016, you don't know how many were
I can't
being marked?
recall what it is, no.
But we know that the call that led to the sale to Mr Stewart's son was not assessed against the marking guidelines. It was not
That's correct.
picked up and monitored, was it?
That's correct.
Now, I just want to take you to some iterations of the marking guidelines. They're an essential part of the quality assurance process, I take it?
Yes.
Yes. And if we look at the marking guidelines that were in place at the time of the sale to Mr Stewart's son, they're at FIG 0002, 0004, 0333. Now, just so I make sure that I understand the structure of these marking guidelines, the headings for the columns, can you explain what each of those headings mean? 01 F, PA, CB?
It's just a mark out of, so 01 is just a mark out of 0 or 1 for that particular item. F is fail, PA is pass, and CB is callback. So you can have fail and callback.
A callback meaning that the
Call
customer
the
needs
customer
to be contacted about that call?
Correct.
And what would lead to a score of 0 and what would lead to a score of 1?
If they didn't introduce themselves by their first name, then they would get 0.
I see. So you're aiming for 1s in that
Yeah,
column, are
yeah.
you?
Yep.
All right. Now, if we turn to, we can see from this set of marking guidelines that it's structured in accordance with the stages of the call. We see introduction at the head of this page. Is that right? Is that about the introductory part of the call?
Correct.
And if we carry through to 0335, we're in a part of the marking guidelines that deals with final expenses cover. And if we look at item 13, we see that sales agents would fail this stage if they neglected to offer accidental death cover or accidental injury cover.
Correct.
And then if we turn to 0337 and we look at item 19, at this point we're in the accidental death cover portion of the marking guidelines. Can you see the heading at the top of the page?
Yes.
And item 19, was the premium calculation provided correctly? And we see that sales agents would fail if they gave the incorrect premium amount, but not if they failed to advise the customer that premiums would be due within 28 days.
Yes, I can see that.
That was an important piece of information for the customer, wasn't
agree.
it?
I
Should that
agree.
have been a fail?
Well, they would have been given a welcome pack, I still think it's inappropriate that they would have been called back, and that should have been a fail.
Should have been a fail and a
And a
callback.
callback, yeah.
Now, if we turn to the final section, which is headed the call mandatory section at 0342, we see item 33, did the agent provide correct information, use appropriate objection handling and avoid personal advice? Now, all of those are important considerations to ensure that the call's legally compliant, aren't they?
Yes.
And we see on this page that it was still not a fail to provide many categories of misleading, deceptive, false or incomplete information. It was not a fail, for example, to say that Freedom's cashback offers were a type of savings plan, superannuation fund or endowment. Do you see that?
I see that one, yeah. Yeah.
That wasn't a fail.
No.
And it wasn't a fail if the sales agent told a potential customer that they were obtaining their bank account details for a purpose other than processing premium payments.
Sorry, I can't see that one, but...
It's about halfway down the page, above the dot point, two lines above the dot point.
Should definitely been a fail and callback.
Yes, if the sales agent says to a customer, I need your bank account details for something else, not
Absolutely.
about taking your premiums for the policy, that should have been a clear fail, shouldn't it?
I agree, yes, definitely.
But it wasn't.
No.
And it wasn't a fail to advise customers that their premiums would never increase. You see 3 lines below that dot point when talking about cover with stepped premiums.
No, that's right.
That should have been a fail too, shouldn't it, Mr. Orton?
I would think so, yes.
And it wasn't a fail to tell a customer that the final expenses cover, the funeral insurance, is the exact same cover as a competitor product. Do you see that?
Yes,
Should have been a fail.
definitely.
And not a fail to tell a customer that Freedom would cancel their existing cover for them, even though presumably Freedom couldn't do that.
Should have been a fail. Agree.
So do you still maintain the view that you expressed to me earlier about the robust nature of these marking guidelines?
Not in 2016, I don't know. I think they've improved.
But you accept that the sorts of statements that we see here that didn't constitute a fail would have contravened the prohibition on misleading or deceptive conduct or false or misleading representations in the ASIC Act?
Potentially could, yeah. Yeah. When I was talking about the structures, Ms. Orr, I was talking about what they're trying to pick up, and the consequences are not strong enough. And I think that's proving that the consequences, it's being picked up, but there's no consequence.
But what's the point of picking it up if it doesn't
Agree.
lead to a fail, Mr. Orton?
I agree.
Someone's gone to the trouble of thinking about all of the things that might go wrong in the call, but not to the trouble of identifying which of them should lead to a consequence.
Yeah, agree.
So you accept the marking guidelines, at least at this stage, were not robust,
We're not robust. Agree.
and you accept that they show that Freedom didn't consider that a potential breach of the law was sufficient to make a call a failed call.
In those instances, yes, I agree.
And if we turn to 0344 within this document, we see at 36, did the call meet Freedom's service standards and quality guidelines? We see that it was, I take it that brackets around an F is a possible fail, is that right?
I'm not sure what the bracket's there. I'm sorry.
Well, whatever it means, we see that if an agent used undue pressure to purchase, the consequence seems to be some sort of qualified failure. Is that right?
I'm sorry, I don't know that one.
And if the same result for if the agent sold excessively on cancellation or sold excessively on the free period. Do you see that? The other two Fs with brackets around them?
I do. And I don't want to guess at it, but given the seriousness of those three things that you just went through, perhaps that's almost like highlighting a fail.
Well,
But I don't know.
I want to suggest to you that there's different levels of seriousness there, because using undue pressure to purchase is a much more serious contravention than selling excessively on the free period.
Yes.
Do you agree with that?
I agree.
But they seem to yield the same result, a result which I think you're unable to explain for us.
I'm sorry, I'm unable to explain that one.
All right, but do you accept that this scorecard, these marking guidelines as they stood in 2016 at the time that Mr Stewart's son was sold his policy, were not a robust way of assessing whether your sales agents were complying with the law and behaving appropriately on sales calls?
I do. I honestly think that if the call went through quality assurance for Mr Stewart's son, it would have been picked up straight away regardless of this.
Well, how can you be so confident of that, Mr Orton? We heard that one of your sales agents listened to the call, appeared to discuss it with someone else, and then came back and said to Mr Stewart that they couldn't see anything wrong, in effect, with the call.
Yeah, I don't understand that.
Yes, so you can't be confident, can you, that if that call had been
that's fair.
listened to, anyone would have thought anything of it at Freedom?
I can't guarantee it, you're right.
Now, since this time, there have been further versions of these marking guidelines, haven't there?
Yes.
I'll tender this version.
Freedom Marking Guidelines, 1 June 16, FIG 0002 0040 333, Exhibit 6.82.
And can I just take you to the marking guidelines issued in February of this year? They are FIG 0002 0004 0181. Have you seen these more recent marking guidelines, Mr Orton?
Are they up on the screen yet? I have, but I believe that there's further updates since this time.
Yes, yes. So this is the version from February 2018, and I want to suggest to you that there were still deficiencies in the marking guidelines as recently as then. If we go to 189 in the document, back to the call mandatories section, we see from in the second line up from the second dot point that it was still not a fail to tell a customer that their bank information was being used for something other than paying the premiums.
Where are we? Sorry, Ms. Orr.
If you go to the second dot point under 29 and go 2 lines up,
Yep. Yep, that's correct.
and it still wasn't a fail to tell a customer that certain types of Freedom cover were exactly the same as a competitor's cover.
Correct.
And it still wasn't a fail to tell a customer that Freedom would cancel the customer's policy for them.
Correct.
It still wasn't a fail, second line from the bottom in 29, to provide information about a competitor product that was inaccurate.
Correct.
And further down the page in item 30, it wasn't a fail for the agent to provide personal advice, which is a breach of the Corporations Act, isn't it?
It is.
So still in the version of these marking guidelines that was in place just a few months ago, we see that Freedom was not imposing consequences for multiple types of breaches of the law.
I'm confused, Ms. Orr, because I can't understand why that would not be a fail if they were into personal advice. I'm wondering if I'm misunderstanding the sheet.
Well, if you're able to explain it.
Can you show me the latest sheet?
Yes, I can. So this was the version up until, as we understand it, July this year. First, I'll tender that version, Commissioner.
Freedom Marking Guidelines, 16 February 18, FIG 0002 0004 0181, Exhibit 6.83.
And we understand the document I'm about to take you to be the current marking guidelines, FIG 0002 0004 0210. Does that look familiar to you,
Yeah, it does.
Mr. Orton?
It does,
Dated the
24th.
24th of July 2018.
It does.
And I'm happy for you to look through this document, but what I want to suggest to you is that the deficiencies that I've been taking you through are resolved at this point. In July this year, the sorts of matters that I have been taking you to for the first time are recognised as fails in the marking guidelines.
Okay,
Is
sure.
that correct?
Can I?
I'm
can I
happy
just see
to
it? Yeah.
take you to it. If we go to 0222 and 0223, you'll see the part of the marking guidelines that contains most of the questions that I've directed your attention to already. You can immediately see a lot more Fs in the fail column,
Yes.
and you can see at 222 on the left-hand side, 2 lines up from the second dot point, for example, that it's now a fail to tell a customer that their bank details are being used for another purpose.
Yeah, I can. I was reading it correctly.
Yes.
Yes.
So you accept that it wasn't until July this year that Freedom was using marking guidelines that failed calls on the various bases I've taken you to.
I think that's right.
Why did it take so long for Freedom to implement a robust marking guideline that imposed consequences for breach of the law?
QA has been something I've been reviewing for a while. It shouldn't have taken until the 24th of July, but it has been something that I was first keen on getting the resourcing up to. It's clear that some of these marking guidelines prior to these changes were insufficient. There is a sign-off procedure with our insurers as well, and I think that potentially could have slowed it down. I'm happy to see that they're there now, but I can see that it should have been in earlier, even earlier in my tenure.
I tender that document, Commissioner.
Freedom Marking Guidelines, 24 July 18, FIG 0002 0004 0210, Exhibit 6.84.
Now, under the current marking guidelines, we see that when the quality assurance officer reviews the call, they're to score the call, is that right?
Correct.
So they progressively mark down the call if there are deficiencies?
Yes, right.
And where there's a regulatory or compliance item that's not been met, a call's marked down from the 100% starting score by 4%, is that right?
They were 4%. These new fails are 16%, which is an automatically fail of the call, and that's where you get 2 of those in a period, which was voiding commission.
And when did that come into play, that regime, Mr. Orton?
It's recent. I don't know the exact date, Ms. Orr.
A
It would be
matter of
July,
weeks?
August. Yeah.
Yes. So prior to then, there was a 4% deduction for regulatory and compliance fails.
Correct.
And a score that was required for the call to be compliant was 80%.
Correct.
So you could have multiple deductions of 4% for regulatory or compliance fails, but still meet the 80% target.
Correct.
And you say within the last few weeks, that's now changed.
It's 85 and it's 16 for one of them.
Each fail is 16%?
Each of a grouping of them that are more serious in the fails.
Oh, I see. So what are the nature of the more serious fails?
Undue pressure.
Undue pressure?
There's a range of other ones that I'd have to see the document in front of me, but there are some other.
So there are
ones.
now some fails that give
Automatic fail for one.
an automatic fail because it takes it below the 85%
Correct.
straight away.
That's right.
And are there still other regulatory and compliance requirements that result in a 4% deduction?
I'm not sure, to be honest. I think the majority of those are regulatory ones. There could be a couple there.
Do you know what the consequence is now of telling someone that you're taking their bank details for a purpose other than to use them for premiums?
Not without seeing the details. I just can't remember them all,
Okay.
what they all are.
That information that you're providing us with now is not information in your statement. I assume
don't
this
think
is
so.
all changes that have been made since your statement, so I'm unable to put a document before you to assist you in answering these questions.
No, that's right.
Now, can I turn to the disciplinary process that Freedom had in place? That's another important part of the compliance system, is that right?
Yes.
And the disciplinary process that was in place in 2016, at the time Mr Stewart's son was sold his policies, they were fairly informal processes, weren't they?
They seem to be, yes.
So there was a process which meant that the quality assurance team provided feedback of some nature on failed calls to a sales team leader, and the team leader then gave some sort of feedback to the sales agent. Is that right?
I believe that's right, yes.
And it was an inadequate system for dealing with sales agents who engaged in misconduct, wasn't it?
Yes.
And I want to explain how inadequate it was by looking at how Freedom dealt with the sales agent who sold the policies to Mr Stewart's son. You've seen the documents in relation to that.
I have.
Now, could I start by showing you FIG 0004 0002 0019? Now, this is a document that Freedom used to give weekly feedback to its sales agents, at least in 2015, because this document is dated the 1st of December 2015. Is that right?
Yes.
And this document has been completed with feedback for the sales agent who sold the policies to Mr Stewart's son in 2016. So we're before he sold those policies in this document.
Correct.
Do you understand? Yes. And we see from the text below the table that this was relatively early on in the sales agent's employment. The agent was told that he'd made a great start overall on the sales front.
Yes, I can see that.
He had met his sales target by selling 20 policies in the week ending the 29th of December, although one had been cancelled. See that from the table?
Yeah, I can.
And he'd met his target of lives insured by insuring 56 lives in that same week.
Yes.
And the main piece of feedback to the agent was, in the box below, just need to get yourself 100% focused to ensure your attention to detail is where it needs to be. And the team leader said that if the agent did this, not only will your sales improve, but so will your commission.
I can see that, yes.
And if we go over the page to 0020, we see that of 4 main identified areas for improvement, the first was accidental death. Must be selling this on every call from now on. You've started off really well showing you can do it. So with today being the start to a new month, I would like to see your MTD percentage above 40% for December. MTD?
Month to date.
Month to date, thank you. I tender that document, Commissioner.
What do I call it, Ms Orr?
Well, I've been referring to it as the Freedom Insurance Weekly 121 document dated the 1st of December 2015, obviously for the sales agent who sold the policies to Mr Stewart's son.
So weekly 121 document date, what period?
It's 1 December 2015.
1 December 15, FIG 0004 0002 0019, Exhibit 6.85.
Now, you're aware, I'm sure, Mr Orton, that the name of the sales agent is the subject of a non-publication direction, so I
am.
won't refer to him by name. Now, could I ask you to look at FIG 0004 0002 0021? We have a document that's a couple of months later. It's dated the 28th of January 2016. So within that couple of months, it seems that the attitude towards the sales agent had changed somewhat. This is a written warning that was given to the sales agent by his manager and by the head of sales in relation to consistent incorrect logging of calls.
Correct.
What's that involve?
That's like the call wrap, how you log the call at the end, whether it's answering machine or if it's been, you've got through to the customer or it's a sale. It's incorrect logging of it, that's all.
And the warning made clear that the agent had been spoken to by at least 2 senior staff members previously in regards to incorrect call logging, but the agent continued to abuse the system we have put in place. And we see there's also a reference to the agent's excessive use of Facebook, including whilst on the phone to customers, in circumstances where he'd previously been asked to refrain from doing that.
Yes.
And the warning stated that further misconduct could lead to further action, possibly termination, depending on the severity of the misconduct. Do you see that?
Yes.
I tender that document.
First written warning, 28 January 16, FIG 0004 0002 0021, Exhibit 6.86.
Could I take you now to FIG 0004 0002 0024 to a document 2 weeks later on the 16th of February 2016. We're still well before the sale of the policies to Mr Stewart's son. And in this document, the agent received a final written warning from his manager and from the head of sales, again in relation to consistent incorrect logging of calls. And the warning again said that the agent had continued to abuse the system that had been put in place.
Yes.
And this time, the warning said that further misconduct will lead to termination with Freedom Insurance.
Yes, it does.
I tender that document.
Final warning, 16 February 16, FIG 0004 0002 0024, Exhibit 6.87.
Now, as a result of that warning, a $2,000 penalty was imposed on the agent,
I believe so, yes.
and that penalty was to be deducted from his commission by the amount of $500 a fortnight for 4 fortnights.
Correct.
Now, the documents produced to the Commission by Freedom show other examples of Freedom imposing fines or penalties on sales agents for conduct or compliance issues. Was that sort of response counterproductive because it could result in a sales agent feeling they needed to sell even more aggressively because they had to earn enough commission to pay the penalty?
I think it could have that effect. I think that's fair. That's fair. I mean, I would much prefer, and that's why the sales and agent disciplinary policy is in place, to go through a formal procedure, and if they're not operating both efficiently and in the interests of the customers, then appropriate action should be taken.
But this was the system at the time.
Yes.
So this particular sales agent got the $2,000 penalty to be taken from his commission over the next 4 fortnights.
Yes.
Now, can I ask that you look at FIG 0004 0002 0025? Now, this is another fortnightly review document for the sales agent for the period from the 8th to the 21st of February 2016, and that was the fortnight in which the agent got the final warning and the penalty that I've just taken you to. Do you recall that that document was dated the 16th of February?
I do.
So the review we see here was completed by the same team leader as the team leader who signed the final warning.
Yes, yes.
But there's no mention of the final warning in the fortnightly review.
No,
Should there have been?
absolutely.
In fact, the tone of the fortnightly review is that the agent should be selling even harder, isn't it?
It is.
We see in the comments from the team leader a bit of a mixed bag in relation to leads the past fortnight. Although lives were decent, just below the expected number of 120, you can be one of the top sellers in the company if you put your mind to it. Less distractions and more sales, which means more commissions.
Commissions, yeah, I'm sure.
And then excellent accidental death, accidental injury conversion of a particular percent. So well done there, keep that up. It's a conversion of 80%. 3 quality assurance fails. Again, it's all down to you not focusing enough. Less fails, again, means more money in your pocket. Still good commissions earned at $2,276, but again, I feel you should be closer to the $3,000 mark. Aim big. Was this a responsible message to be giving a sales agent who in this same fortnight had received a final warning and a $2,000 penalty to be deducted from his next 4 sets of commissions?
Not in my opinion, no, it wasn't.
You can't explain why this happened?
I can't explain why that happened, but it's not appropriate, I agree.
I tender that document, Commissioner.
Freedom Insurance Fortnightly 121, 16 February 16, FIG 0004 0002 0025, Exhibit 6.88.
Now, over the following months, there were continuing issues with this agent's sales practices, weren't there?
From the notes that, yeah.
You've seen
Yeah,
the
I've seen
documents that we
documents, yes.
provided to you and you accept that characterisation?
Yes.
There continued to be issues with the agent failing to log calls correctly. That was one of the problems. You've
Yes.
seen that? But there were also issues with him pressuring customers to provide their bank details. Have you seen those references?
I can't recall them at the moment, but if you say they're there, yes. Yeah.
Would you like me to show you that document?
Sure.
Yes. FIG 0004 0002 0030. This is an email to a person named Nicole about retention control checks on the dishonour list, and it relates to our sales agent. And we see some highlighted portions here about a particular call. Agent gets the PO is policy holder, is that right?
Yes.
To select
Policy
the
owner.
date of payment. Then instead of asking the policy owner which payment method she would prefer, the agent straight away says, your debit card, when does that expire, please? Can you read that out to me quickly? What's that? The agent repeats, your debit card, when does it expire? Can you check that for me quickly? Policy owner says, but my money don't come out of my debit card, it comes from my Bendigo bank. Agent, that's okay, you can change it at a different date. Policy owner asks the agent if he wants her debit card. Agent tells her he wants to check it. Policy owner says, it don't work, I'm telling you. Agent says, no, that's fine, it's okay, I just got to set it up with that though, okay? I don't know, it don't work, I'm telling you. Agent ignores the policy owner's warnings that the card doesn't work. Instead, the agent says, all right, okay, what's the expiry date? And we see down the bottom, agent then enters this information incorrectly, which causes the policy to dishonour. So you agree that those were issues in relation to the agent pressuring customers to provide their bank details?
Absolutely. And
Yes,
poor behaviour.
Yes. I tender that document.
Email concerning call converted date to March 16, FIG 0004 0002 0030, Exhibit 6.89.
So that related to a call from the 2nd of March. We're getting closer to the period in June when Mr Stewart's son was sold the policies. But throughout this period, even with these sorts of matters being detected, the agent was continually given positive feedback because he was making lots of sales, wasn't he?
I think there are some positive feedback in some of those notes, yes.
Yes, well, let's have a look at FIG 0004 0002 0029. This is a fortnightly review from the period from the 29th of March to the 13th of March. The agent was told, excellent work on your accidental death and injury cover. You're converting at 82%, one of the highest conversions in the company. Keep it up, you always do well with accidental death and accidental insurance. You're only 6 lives off your expected target, even after a poor second week. You're well capable of smashing out the policies and lives once your head is in the right place. A bit disappointing when you look at your commission for this week, but I've no doubt in the coming fortnight you will be back up at the top of the pile. So this is the sort of feedback that the sales agent was getting.
It's not consistent at all. I agree.
It's what, sorry, Mr. Orton?
Inconsistent with his 2 warnings.
Yes, well, he's got 2 warnings and complaints are being made about him pressuring customers
Yes.
into providing their bank details. He's still not logging his calls correctly, but the feedback is all about how well he's doing with his sales targets. You accept that?
Yes.
I tender that document, Commissioner.
Fortnightly 121 for period 29 February to 13 March 16, FIG 0004 0002 0029, Exhibit 6.90.
But then by early April 2016, there were serious concerns about the agent's behaviour. I'd like you to look at FIG 0004 0002 0004. This is an email from the sales agent's team leader to the sales agent. Now, he says, mate, you really need to be careful how you speak to customers. Quality assurance are on your case at the moment. There's absolutely no need for you to be like that. Like I said in your 121, you could be right up there with the likes of others. There's not many people who are close to them too. You're doing really well, like I said, but some of your calls are bad. But I can't keep covering your back. It's going to go downhill if they keep coming back to me with issues from your calls. Just be polite with people. This customer told you he wouldn't renew because of the cost, but you still put it through knowing he wouldn't renew. These calls are not acceptable, and it makes retention's job 10 times harder to save at renewal. I know you need the cash because you're heading home, but you shouldn't be sacrificing your job because of it. Buck up now. I don't want any more feedback from quality assurance for you. It's me who Adrian speaks to about it, okay? This is the email I received. And he then sets out an email with some feedback about a particular call that the sales agent had. So these were the sorts of concerns that were being expressed by quality assurance and being conveyed to the sales agent by the team leader.
Yeah.
I tender
Yes.
that document.
Email from Brian Riley for June 16, FIG 0004 0002 0004, Exhibit 6.91.
I'm sorry, Commissioner, I should have made clear, we understand this email to be in the American date form, so the
6
6th of
April.
April.
6 April 16.
Thank you. Now, this level of concern was reflected in at least one of his fortnightly reviews. Can I ask you to look at FIG 0004 0002 0260? And this is a fortnightly review from the first half of April 2016. We're now a couple of months before Mr. Stewart's son was sold the policies. And we see the comments are in this document that covers the 4th to the 16th of April. Again, you've shown how well you can, smashing over 200 lives and earning amazing commissions. But all of that counts for nothing when you continue to receive negative feedback in relation to your professionalism, quality assurance. There's only so much I can do for you, but when you continue to do the same things over and over, it's a problem. You need to get your act together and start doing things correctly. So we see from this fortnightly review and from the previous document that the sales team leader was trying to protect the sales agent from continuing scrutiny by the quality assurance team?
I think in general the company's has not been tough enough on the agents, and that's apparent in these.
And do you accept that we see the sales team leader here attempting to protect the sales agent from further quality assurance scrutiny?
Sure, if I'm seeing that he's protecting him, but he's saying that this is the issue. But it's not good enough. I mean, he's been given a lot of chances already.
Well, why was Freedom not moving at this point to terminate the sales agent?
Yeah, I can't answer that, but I believe he should have been terminated by this stage, given the quality.
He'd been given a final warning, and there'd been multiple problems with him since the final warning, including serious concerns about the way he was conducting calls. Was it because he was too successful at selling products to let him go?
I honestly think the reason is that the company was too soft on agents in the past. I've seen, or I've heard examples of agents being kept as well who are low sellers with for long periods of time. So it's just has been a little bit soft in that area.
What did it take to be terminated by Freedom?
Well, I think the situation has changed now.
And what did it take at this time?
It took a call to a vulnerable customer to terminate this person.
I see. So you say that after the complaint that was made by Mr. Stewart about his son, that led to the termination.
Yeah.
But none of what we've seen in the documents I've just spent some time showing you led to his termination.
Didn't appear so.
The warning signs were all there, weren't they, Mr. Orton?
Yes.
I tender this document, Commissioner.
Fortnightly 121 review, period 4 April to 16 April 16, FRG 0004 0002 0260, Exhibit 6.92.
Now, in April and May 2016, the agent corresponded directly with the head of sales. Have you seen those communications?
Yes.
And he said that he was worried about his situation within the company and acknowledged that he'd made stupid mistakes through greed. Do you recall that?
I do recall that.
And he highlighted to the head of sales how good his upselling skills were. Do you recall that?
Yeah, I do.
What do you think he was referring to there?
It could be increasing the coverage, or it could have been adding the accidental death and accidental injury, which is more likely.
And in May, there were serious complaints continuing to come in about the sales agent. Do you accept that?
Yes.
There were customers who were unhappy with the way he had spoken to them.
I can't recall that one, but yes, if you say that, yes.
Do you recall that there were assessments of him as being rude and assessments that he had berated customers for not listening to him?
Yes.
And that there were more complaints that he'd pressured customers to provide their bank details. Do you recall that?
I do.
And did Freedom move to terminate his employment at that point after those additional complaints were received?
No, they did not.
Should they have?
Yes.
And then in June 2016, in the week after the agent sold the policy to Mr. Stewart's son, the quality assurance team dealt with a call in which the agent had engaged in serious misconduct by signing up a person who had explained that they were on a disability pension and had mental health problems in circumstances where it was clear that they weren't competent to make the decision to purchase the policy. Have you seen the references to that?
Yes.
So that was another incident in the week after the sale to Mr. Stewart's son.
Correct.
And in your statement, you say that the agent was exited by Freedom on the basis of unacceptable sales conduct, including his conduct in selling the plan to Mr. Stewart's son.
Correct.
Now, the agent went home to the UK for an approved holiday in the middle of June, didn't he?
Yes.
And under his visa, he had a few weeks in which he could continue working at Freedom upon his return to Australia.
Yes.
But before he left, his team leader told him that it was unlikely that Freedom would accept him back.
Some advice, yes. Yep.
And then the complaint from Mr. Stewart came in,
Yes.
and Freedom decided not to have the sales agent back when he returned to Australia.
That's correct.
So he wasn't so much exited on the basis of unacceptable sales conduct as not permitted to return to work for the last few weeks after his holiday.
My understanding of the situation was that my predecessor reviewed the complaints register and found the call, Mr. Stewart's son's call and the situation, and then spoke with Adrian and also sent an email to Adrian, who's the head of sales, and they determined that definitely should not be coming back. But no, you're correct. I can't point and say the sole reason for his departure was because of the call.
It wasn't, was it?
I think there were other reasons as well, but I think this was certainly part of it.
He shouldn't have still been there to make that
I
call,
agree.
should he, Mr. Orton?
Not in my opinion.
Could I ask that you look at FIG 0001 0001 0075? Now, we see on this page an email from your predecessor, the Chief Operating Officer, to the Head of Sales, referring to the call that had been made to Mr. Stewart's son. Do you see that
Yeah,
on the
I do.
1st of July 2016, partway down the page? Your predecessor, the Chief Operating Officer at that time, said, "Morning A," to Adrian Turner, the Head of Sales. "I am just doing the complaints register and came across this one. Do customer service let you know about this? The call is a bit of a shocker!" Exclamation mark. The sales agent is gone and policy has been cancelled, so nothing to be done. That was the email from your predecessor, the Head of Operations at Freedom.
The Chief Operating Officer,
I'm
yeah.
sorry, the
Yeah.
Chief Operating Officer.
Yeah.
Was that an appropriate response in your view?
No, wasn't strong enough.
And we see that the Head of Sales responded to that email from the Chief Operating Officer. "Good call. He's been a liability in the way he gets the sales. I'll ask CS to make sure they give you feedback when they get complaints like this, and also to let me know. I felt so sorry for the poor customer throughout the call. Sad face." Was that an appropriate response from your Head of Sales to your Chief Operating Officer about the call in which Mr. Stewart's son was sold these policies?
No, it's not.
These are very senior people within your organisation,
Yes.
and this was an inappropriate email exchange, wasn't it?
And childish.
It minimised the
Agree.
gravity of what had occurred.
Agree.
I tender that document, Commissioner.
Email of 1 July 16 concerning complaint / do you get notified, FIG 0001 0001 0075, Exhibit 6.93.
So it had been clear for at least 4 months prior to the sale of the policies to Mr. Stewart's son that the agent was, to use the Chief Operating Officer's words, a liability in the way he gets sales.
Correct.
But Freedom didn't take any adequate steps to stop the agent from causing harm to Freedom's customers or to Freedom itself.
No, appears not.
He was given compliance warnings, but at the same time he was strongly encouraged to continue trying to hit sales targets and maximise his commission.
Correct.
Do you think the community would expect Freedom to have taken much more decisive action in relation to his repeated misconduct?
I do, and I can say that there would be much more decisive action today.
And we see from this email that the Chief Operating Officer asked the Head of Sales whether customer service let her know about complaints. CS is customer service, is that right?
That's right.
And the head of sales responded that he didn't recall being notified of this, and I couldn't find anything in my emails.
Yeah, look, I think some of that's a failure of process with the company growing so quickly. It is a young company, and it is on a bit of a journey to improve some of these things, but he should have known.
And the Chief Operating Officer responded, I'll ask customer service to make sure they give you feedback when they get complaints like this, and also to let me know.
Yeah.
So there were broader problems with the feedback
Yeah, I
loop
agree.
within Freedom at that time, because serious complaints weren't even drawn to the attention of the head of sales.
No, that's what I'm saying. I think that's the journey the company's been on. I think that would definitely, well, I know that would be drawn to my attention today.
Do you think I should continue or stop here? Commissioner, I'm not going to be able to finish with Mr Orton this afternoon. I'm about to embark on the last substantive topic. I'm happy to start that, or to start that in the morning.
I think start in the morning. Is that going to derange the
No.
program?
No, not at all, Commissioner.
If Mr Orton's got to come back in any event, I'm sorry, Mr Orton, but we'll have to have you back. If we resume at 9:45 tomorrow,
Yes, thank you, Commissioner.
if you can be
Commissioner.
back in time to begin by then, Mr Orton, please.
Yes.
And we'll adjourn until 9:45. Yes, Ms Orr.
Commissioner, before we resume with this witness, we want to correct one matter from the opening statement on Monday. In the course of the opening statement, we said that in the 5-year period from the 1st of July 2013 to the 30th of June 2018, MetLife had paid more than $390 million in commissions to financial advisors or financial advice entities whose clients purchased its products. That was an error. And we should have said more than 390,000. The precise figure is $406,500, and we apologise to MetLife for that error. Now, Mr Orton, I want to turn to a new topic, which is the retention strategies employed by Freedom.
Okay.
Now, I asked you a bit about the training of retention agents and took you to a document yesterday. How many retention agents does Freedom currently employ?
I believe 29.
29. And how many sales agents?
It fluctuates from about 65 to 100.
Now, why does Freedom need so many retention agents?
The retention agents, as I explained yesterday, their job is to provide alternatives for customers.
Their job, as you explained it yesterday, also included attempting to save the sale, save the policy.
Correct.
And do you need retention agents in part because a significant amount of your business is brought in through the Freedom Protection Plan, which doesn't require premiums to be paid on the funeral expenses product in the first 12 months?
To a degree, that's right. Not on every occasion, but these retention agents also actively call customers prior to the expiry of the 12-month period to ensure that the product remains suitable to their needs.
So they actively call to ensure the product remains suitable to the customer's needs.
Correct.
Why are they doing that?
People's circumstances change during the year, and they may call to say if that cover still suits them. They may have decided to include additional family members on their cover during the free period, but no longer wish to pay for it, and that's perfectly okay.
But how does Freedom select the people it's going to call to ensure that the product's still suitable for them?
It tends to call some of the customers who've chosen a higher number of lives or cover to ensure that it remains affordable for them.
And the call happens in the 12-month free period, is that right?
Correct.
So once customers are required to start paying premiums after the expiration of that 12 months, do you find that people want to cancel the product?
Some people do. Some people, and that's okay because the product is a true free period. So if some people decide to have that protection for 12 months and not continue to pay, that is fine by us.
You say a true free period, but you told us yesterday that you are now moving to an opt-in system rather than an opt-out system to ensure that it was a true free period.
Yeah, look, my words yesterday on true free period were not great. I think they've both been true free periods, but if there's any doubt at all, now that it's an opt-in, I think it makes it very clear.
Freedom's recently had contact with ASIC about its retention strategies, hasn't it?
It has.
And on the 30th of June this year, ASIC asked Freedom to provide a statement to it containing certain information about its retention strategies.
Correct.
And ASIC asked for information about the number of customers who've called Freedom to attempt to cancel their policies since the 1st of June last year.
Correct.
And ASIC also asked for information about the reasons that customers gave for wanting to cancel their policy.
Correct.
And about the number of customers who ultimately retained their policies after having called to cancel.
That's right. Yes.
And Freedom gave that information to ASIC a couple of weeks ago on the 15th of August.
That date sounds right. Yes.
Yes. And you included the request for that information from ASIC as an exhibit to your statement.
Correct.
But you didn't exhibit your response to ASIC to your statement.
I'm not sure. I mean, I'm sorry if that was the case, but I mean, we've tried to provide every document that was necessary.
Right, but the response was not part of your statement. We have a copy of that document and I'll show it to you. It's ASIC 0068 0001 0024. Have you seen this letter before, Mr. Orton?
I have, Miss Orton.
You recall that it's a letter under your hand, dated the 15th of August this year.
Yes.
And we see from the first page of this letter, at paragraph 1.1, that Freedom identified that in the period from the 1st of June last year to the 30th of June this year, it had received 37,584 telephone calls seeking to cancel policies.
That's correct.
And 28,445 of those calls had been linked to an identified consumer.
Correct.
What does that mean?
They may call, the customer may call on another telephone line rather than the numbers that we've got, and it's difficult for us to determine, or impossible for us to determine who that customer was.
I see. So 37,584 calls were made attempting to cancel policies, and you can identify 28,000 odd of those as belonging to particular customers
Correct.
of yours. I see. Now, using the figure for the calls that you can link to one of your policy holders, on our calculations, over the relevant period, the 1 year, that's an average of about 72 cancellation calls a day. That's 28,445 divided by the 394 days in the period.
Oh, okay. Yep.
72 cancellation calls a day. Does that figure trouble you, Mr. Orton?
It doesn't trouble me considering the 12-month period, if people have had the 12-month period and they've enjoyed the coverage and they haven't paid any premium. But, you know, any cancellation is troubling. It's, of course.
What does it say to you about whether people wanted the policy in the first place?
And I'll stick to, Ms. Orr, I'll stick to the main product, which is the Freedom Protection Plan.
Yes.
Some customers will take that knowing that it's a 12-month period, and will take it knowing that they will cancel. but have the protection during that time. And it's a true protection. We paid $7.5 million worth of claims just for that product in the free period. So if they decide to do that, that's okay, and that's their prerogative.
You know at Freedom, don't you, that many customers will not go to the trouble of calling Freedom and cancelling that policy at the end of the 12-month free period?
The model is certainly not intended to do that. And very often, if a customer pays a few premiums and says, I didn't mean to, we will simply refund it.
Well, let's look at a bit more of the data that you provided. If we go to the following page of this letter, 0025, and we look at paragraph Roman numeral 3, we see that 3,585 of the calls were made during the cooling off period.
Correct.
So that was approximately 13% of the cancellation calls.
Correct.
So the remaining 87% were made after the cooling off period had ended.
Correct.
And we see from Roman numeral 5 on this page that Freedom only began recording the reason why a customer wanted to cancel their policy a few months ago, in March.
Correct. That's something that I implemented.
Why wasn't it recorded before then, Mr. Orton?
I really don't know, but it's very difficult to understand what a customer feels about the product if you're not recording that, which is something that I wanted to do.
And since that time, when you've started recording that information, just under half of the policy holders who called to cancel their insurance said that it was because they were unable to afford the cover. You see there, 47% of them said that they couldn't afford the product.
That's correct.
And if we go over the page to 0026, perhaps if we could have both pages on the screen together, we see that just over a quarter, 28%, said that they were cancelling because they didn't want the cover.
Correct.
Is that a figure that troubles you, Mr. Orton?
They may have taken it out for the free period, but if they don't want the cover and there's other reasons, then it does trouble me, I agree. We need to break that down further in the future. It's a start, learning about the customers and how they feel about the cover. There is a lot of work going on within the retention area at the moment. I've instigated an independent review by a company called Linebridge Consulting, who have experience right around the globe dealing with customer service, retention, customer care for telcos, for life companies, for banks, for a range of companies. And I really want an independent review of how that is operating both from an efficiency point of view and most importantly, to ensure that the customer outcomes are the best that they can be.
Well, these figures that I've been taking you to and will continue to take you to are troubling in terms of the customer outcome, aren't they?
It needs to be taken in line with the 12-month cover.
Well, let's come to what level of success the customers have when they attempt to cancel their policies. So the figures I've taken you to so far are about how many people call and attempt to cancel and the reasons that they give. We see from the figures in Roman numeral 5 that despite 75% of policyholders indicating that they either don't want the cover or can't afford the cover, only a relatively small number of the policyholders are successful in cancelling their cover.
Correct.
If we look at Roman numeral 6, we see that only 8,118 calls, that's 28.5% of the calls, resulted in the caller successfully cancelling their policy. Do you see
I can't
that?
work the numbers out at the moment. Yeah, I can. Yep.
Roman numeral 6,
Yes.
subparagraph B.
Yeah.
And a much larger number, 12,720 calls, or 44.7%, resulted in a retention of the cover without change.
Correct.
and 7,598, or 26.7% of the calls, resulted in a retention of cover with alterations made to the terms of the cover.
That's right, correct.
And then we see from paragraph D on this page that of the 12,720 calls that resulted in a retention of cover without change, so the person called to cancel but was unsuccessful in doing that, 3,960 of those policies have since been cancelled or lapsed.
That's right.
So on our calculations, that means that at the time Freedom provided this letter to ASIC in the middle of August, approximately 69% of Freedom customers who had called to cancel their policy still held that policy without change.
I can't do the numbers in my head at the moment, but if that's what you say the numbers are, then I'm okay.
So more than 2/3 of the people who called to cancel their policy were persuaded to hold on to the policy without change. Does that trouble
Not
you?
without change. It doesn't ring true to me that would be that high without change.
That's the result of the numbers in this letter, Mr. Orton. I'll take you to the numbers that deal with retention with a change. I'm dealing at the moment with retention with no change. They call to cancel, and after the call, nothing has changed. They still hold the same policy, 69% of them.
Okay, I'm struggling to get the 69%, but okay, it's a high amount though, Ms. Orr. I agree. Retention is an area that I said is a key focus of mine to improve. This is the Lionbridge consulting areas. The Commission's heard a lot over the last couple of days of some things that need to improve. I agree. I'm not making excuses for some of the things that need to be improved. That's the reason that I've been brought on, to improve these things. But at the core of the company, there is a customer focus. It just needs to improve because of the growth.
Well, where do we see the customer focus, Mr. Orton, in the fact that 69% of people who call and ask for their policy to be cancelled are unsuccessful and leave that call with their policy intact?
Commissioner, the 69% has not been explained, and the witness doesn't accept it other than say-so of counsel assisting. So perhaps it could be justified, and then the witness can answer it more meaningfully.
Well, it's an arithmetic calculation based on the figures that you've provided.
Well, we might need to unpack it a bit, is
Yes.
all. It's 12,
That's
is
right.
it?
It is. So
12,000 of?
12,720 calls.
Out of? 28?
Yes.
Well, that ain't
That's not
69.
No, 3,000.
12 of 28 is less than a half.
Cancelled or lapsed. We'll just look into that, Commissioner. It is the aggregation of a couple of parts of this statement of this letter, because we've deducted the people whose policies were lapsed or cancelled after their attempt to cancel the policy. So it requires a few figures to be put together. I'll articulate the formula for getting to that in just a moment. But if I move to the other part of the figures that's dealt with in subparagraph C and come back to the 69%. Subparagraph C tells us that of the 7,598 calls that resulted in a retention of cover on amended terms, 2,382 consumers changed their level of cover.
Correct.
And 5,216 removed an additional life or a benefit component from their cover.
Correct.
The figure I want to put to you, which I'll double check while we're discussing this, is that means on our calculations that at the time this letter was produced, 85% of the customers who tried to cancel their policy but were convinced by Freedom to keep that cover on amended terms continued to hold the policy. So they're the two figures that I'll explain in more detail to you. But while we do that, can I put to you that the figures that you have provided to ASIC show that your retention strategies have been highly successful.
Oh, I agree. I agree.
And what do you put that success down to?
I put it down to what it should be put down to is the right product and good customer outcomes. I think that retention has been too strong. I don't know another way to describe that, but it has perhaps offered too many options to customers and gone too far. Like I said, Ms. Orr, it's a focus of the company, it's a focus of mine to change this. It's not just about having a consulting company come in either. It's about good conversations with customers, making sure that they want the product, making sure that they are given some reasonable options and that they do understand either what they're giving up or what their financial options are with that particular product. But it needs to improve.
So
the board has endorsed that. The board has endorsed improving this area. And I agree that this is an area that needs continued focus. And that's one of the reasons I've been brought on.
So you said in that answer retention has been too strong, customers have been given too many options, and retention has gone too far.
Yes.
It's not about customers having been given too many options, is it, Mr. Orton? It's about customers not being permitted to cancel their policies when they call up with that intention and express that intention.
I agree, Ms. Orr. I think there's difficulty in cancelling at the moment that needs to be sorted.
Why does Freedom make it so difficult for customers to cancel their policies?
It shouldn't make it so difficult. I agree. Like I've said a couple of times over the last couple of days, I think offering options is okay, but it is too difficult to cancel in some circumstances. We must remember that we're talking about, even with the sales structures, that our customers rate the company quite highly. The difficulty is that we have sections of the business that need to be improved. In sales, we get a rating of 9 out of 10 from our customers at the end of a call. In retention, it's lower. It's about 8. And that's not the important part. The important part is looking at those people who rate the experience as 1 or 2 or 3. And that's the area that we need to concentrate on.
Have you included information about either of those ratings that you've just referred to in either of your statements?
I haven't, because it's later information, but I can provide it.
You've expressed concerns to ASIC about the quality of your retention calls, haven't you?
Yes, I have.
You told ASIC that you'd listened to 400 retention calls.
I don't think there were 400 retention calls, Ms. Orr, but there's at least 400 calls, and there were a few retention calls in there. It was a split between sales and retention. Let's call it half-half. Regardless, it's a lot of calls I listened to.
And why did you do that?
That was part of the ASIC notices that we received, and we wanted to ensure that we listened to those calls. In the first meeting that I had with ASIC, I highlighted the fact that I had some concerns with retention and that it was a focus to improve it.
And after listening to those calls, what view did you form about the retention calls?
That it needed a lot of work, that in some instances it was far too difficult for customers to cancel, and that we needed to rework that from a customer perspective and from a process efficiency perspective.
What were the key problems that you heard in those calls?
The key problems that I heard were not taking no for an answer on certain calls, and that cannot be the case. That's something that I will not allow to happen in the future.
You told ASIC that the tone and the manner of some of the calls was unacceptable.
I did. That was very early on. We requested a meeting after the notice to ensure that we were working cooperatively with the regulator. At that stage, I believe that we'd listened to only some of the calls. I can't remember if all the calls were put in at that stage. But personally, obviously I can't listen to 400 calls. The time to do that is just takes too long. But I was getting feedback from others that it was too difficult.
Yes, and you agree that you told ASIC that the tone and manner of
Yes.
retention agents was unacceptable in
I
a
agree.
number of those calls. Are you aware that ASIC has considered reviews of freedom made on publicly available websites, as well as complaints made direct to ASIC by Freedom customers?
ASIC did mention to me that they'd had some specific complaints, as well as doing the direct life review. Yes, on websites there are some concerning comments. I agree. We try to address those wherever we can. But I'd also point out that our rating on our online rating on companies such as Google Reviews is amongst the highest in the market.
Well, I want to show you a document, but before I do that, could I tender your letter to ASIC from the 15th of August?
Letter Freedom to ASIC 15 August 18, ASIC 0068 0001 0024, Exhibit 6.94.
Can I show you an ASIC internal document, which is ASIC 0068 0001 0032? Now, this is not a document I expect you will have seen, Mr. Orton, and if we could perhaps have the first and second pages of that document on the screen together, you'll see that it's an internal ASIC document prepared for a meeting with you on the 23rd of May, and it's a summary and set of discussion points. Do you see that?
I do. I'll read it just for a minute.
Sorry, did you ask if you could read it, Mr. Orton?
Yeah,
Yes,
yeah.
yes, of course. Commissioner, Freedom's Council have raised with me a concern about a particular part of this document that they believe is covered by a non-publication direction. We are not certain that that is the case, but could we in the meantime take down the first page?
Take it down.
Dates.
Mr. Orton, have you finished reading that page? I'll just take it down.
Yes, I have.
Perhaps if we could take that page down as well. Now, the questions I want to ask you about that document don't traverse the topic that has been raised as potentially covered by a non-publication direction, and we will examine that. But do you recall reading on the first page, Mr. Orton, towards the bottom of the page, a reference to issues that had been raised in customer complaints and in reviews of freedom on publicly available websites?
Yes, I did.
And do you recall that the issues raised included that customers were being told that they could only cancel freedom policies by phone, not in writing, and that they were being put on hold for long periods?
Can I answer both those questions separately?
Yes, first can I just ask you to confirm that you saw that?
Saw that, yes.
And yes, you'd like to
Yes.
comment on that now?
Yeah, I'm not aware of any direction where customers are required to cancel by writing. I am aware of some inefficiencies in the call centre, which I'm addressing, in terms of being able to get through to our customer care agents, our customer service agents, retention agents, which I am addressing at the moment. So I accept the second part, absolutely. The first part, I do not believe that there's ever been a direction that it needs to be in writing.
But you see that customers have told ASIC that that was their experience?
I see that.
Or put that on a publicly available website?
Yeah, I see
that.
that.
Was the other source of information. And the websites and complaints also included statements about Freedom representatives not accepting cancellation requests.
Yeah, I would need more information on that, but I did see that, yes.
And that customers have also said that they were being questioned at length by the Freedom representative when trying to cancel their policies.
Correct.
And that sometimes Freedom representatives had just hung up on customers who were attempting to cancel their policies. Did you see that reference?
Yeah, and I did see the reference in there.
So are you aware that customers are having those sorts of issues when they attempt to cancel their policies with Freedom?
I'm aware of some of those issues. I'm not aware of customers being hung up on. I am aware of some wait times. I suspect, and I don't know, but I suspect that if you'd like to call through is an option on, or send a note, is an option because they've contacted us via another means, via email or via what it may be, then I'm not sure. But they're certainly not advised that they can only cancel if they write in.
But you see from that
I see
document
that.
that some customers believe that that is what's happening to them.
Correct, I do.
Now, Freedom's received a number of complaints directly from customers about experiences with attempting to cancel their policies.
Yes, it has.
And the document that you provided to the Commission in response to the request for acknowledgements of any misconduct or conduct falling below community standards and expectations disclosed about 27 instances of retention conduct that Freedom conceded fell below community standards and expectations.
Okay, yep, yes, it did.
And the vast majority of those complaints were received since the start of February this year.
Yes.
And the complaints we see from the document that you provided relate to issues such as Freedom failing to cancel in accordance with a request and premiums being deducted after someone has cancelled their policy.
Yes.
And you told ASIC in the meeting that you had in July that you considered that the retention problems arose at least in part because there wasn't enough focus on quality assurance. Do you recall that?
I don't recall that, but I
Do you
imagine
have
it's
that
something
view?
that I would say.
And
Yeah.
was that only one of the difficulties that led to these problems, do you think?
No. And I'd also like to put that ASIC meeting in some context.
Mm-hmm.
That ASIC meeting was a very initial meeting designed to really just engage with the regulator and explain to them that we are very keen to deal through any issues and to work cooperatively. It wasn't intended as a detailed meeting on any of these issues.
It may not have been, Mr. Orton, but you expressed a number of views in that meeting, did you not?
I did.
Yes. And do you maintain those views or have you modified those views?
I maintain those views, but I agree with you as well that there are issues in terms of retention that need to be fixed.
Is the bigger problem with retention that your processes and procedures are geared towards ensuring that your retention agents do everything possible to retain a policy that a customer wishes to cancel?
I think the retention has been too strong and the processes have been too strong. I agree with you.
And do you agree that they are told, the retention agents, to do whatever possible to try and retain that policy?
No, I don't agree with that, Ms. Orr. I don't agree that they're told whatever possible.
They've got KPIs, don't they, Mr. Orton?
They do.
And one of those KPIs you told me yesterday was a save percentage,
Correct.
and that's about how many policies they save from cancellation.
Correct.
How does that feature in the KPIs?
Quite highly in the KPIs.
How highly?
I'm not sure what the question. I mean, there's a number of KPIs, but
How
that is
many?
that is a key measure of their success.
It's the primary KPI.
I would say so, yes.
And are there other KPIs that are applied to them?
Yes, there is.
And what are they?
There's quality KPIs included, and a number of other areas that I'd have to see the document first. But quality is included. But
The primary
save-
KPI is how many policies they manage to save from cancellation.
that's correct.
And how are your retention officers currently remunerated?
They're currently remunerated on a base salary plus a commission. Only a very small proportion of those retention agents currently receive a commission, 20 to 30%. But as I explained yesterday, I'm removing that completely.
So 30% of them currently receive commissions, is that what you were saying?
Yeah,
And what proportion of their remuneration tends to be from commissions?
I can't guess that, but some of them would earn decent commissions, probably similar to the sales agents, if not higher.
And those commissions are calculated by reference to how many policies they've saved from cancellation.
Yes, with a quality overlay.
And you've indicated yesterday and today that commissions for the retention agents won't continue in the future.
Correct.
And have you done that in recognition of the fact that a commission structure for agents who are handling requests from consumers to cancel their policies is likely to lead and has in fact led to poor customer outcomes?
I think there's occasions of poor customer outcomes here, definitely, which is why I want to focus on this area.
And you accept that the commission structure was a driver for that?
I think the commission structures can be a driver for that. I agree, Ms. Orr.
And it was?
Yes.
Yes. Can I ask that you look at FIG 0008 0008 0181? Now, this is Freedom's retention cancellation call guide.
Correct.
It's provided to your retention agents
Correct.
and it sets out the 4 main stages of a cancellation call.
Correct.
The first is to set the scene.
Yes.
And that involves finding out the underlying reason for wishing to cancel and offering to review and run through scenarios.
Correct.
And if we go to the second page of this document, 0182, we see a call guide to personalise objection handling, which is to be used depending on the reason that the customer gives for wanting to cancel the policy.
Yes.
And one of the reasons we see if we go to 0184, one of the reasons that Freedom expects a customer to give is not required, I don't want it. Do you see that on the left-hand side of the page?
Yes, I do.
To which Freedom retention agents are told to respond, what plans do you have in place once the cover is removed to cover the costs of the funeral should you pass away? That's what your retention agents are told to say in that instance.
From this document, yes, yes.
And if the person wants to cancel accidental death or accidental injury cover, your agents are told to say, well, what alternative have you put in place to cover you for a lump sum payment should you pass away unexpectedly or incur an injury that results in unexpected medical expenses or possible loss of income?
Yes.
So your retention agents are trained to respond to a request for cancellation by asking the customer to explain to them the alternative plans that they've made once the cover's removed.
From this document, yes, and I agree that that's not appropriate.
That is an intrusive and inappropriate line of questioning for your retention agents to take in that setting, isn't it, Mr. Orton?
I agree.
It's designed to make the policyholder feel sufficiently anxious that they'll change their mind about cancelling their insurance.
I agree.
And if we go back to the second stage of the call at 0181, the second stage of the call is to ask questions
Yes?
with the purpose of getting information that can then be used in the third stage, which is about providing personalised solutions.
Correct.
And the intention of the personalised solutions is for Freedom to do whatever it can to encourage the policyholder to retain their insurance.
I can't see that it says that, Miss Orr, but it
Well,
does go through some options here.
Yes, these are the options, I think, that you've referred to a
Yeah.
number of times, Mr Orton. The options include lowering the sum insured, reducing the level of cover, reducing the number of lives, changing the payment frequency, skip a payment and align to payday, alternative product, or upsell to accidental death or accidental injury, only as a solution to a problem or to match a competitor offer.
Yes, I see that.
Now, that is the training currently in place for your retention officers.
Yes.
I tender that document, Commissioner.
Freedom Retention Cancellation Call Guide, FIG 0008 0008 0181, Exhibit 6.95.
Now, I want to look at how this training played out in the conduct by the Freedom staff who dealt with Mr Stewart's attempt to cancel his son's policy. I want to start with the first call that Mr Stewart made to Freedom to attempt to cancel the policies, which involved the customer service staff rather than the retention staff, it appears to us. Is that correct?
Yes.
So if we could go to FIG 0001 0001 0258. Now, at the time of this call, no one within Freedom appeared to have listened to the call in which Mr Stewart's son had purchased the insurance. Is that correct?
That's correct, Miss Orr.
But when Mr Stewart told the customer service consultant on the following page, 0259, that his son had been signed up for a policy regardless of his intellectual disability, her response was, do you see towards the top of the page, but just saying the agent probably didn't know at the time. You see that?
I do.
And after Mr Stewart asked to speak with the customer service consultant's manager, she assured him that Freedom would listen to the call in which the sale was made and then call Mr Stewart back later that afternoon. Do you see that further down the page?
Yes, I do.
Now, what I want to take you to now is what this customer service consultant did after this call from Mr Stewart. Could I show you FIG 0001 0001 0069? Now, after the customer service consultant finished the call with Mr Stewart, she emailed another customer service consultant at Freedom, didn't she?
Yes, she did.
Now, if we look at the email at the top of the page, we see this is at 12:17 p.m. on the 15th of June. Hi girl, policy owner's dad called in angry as he thinks the sales agent took advantage of policy owner who is disabled by selling him funeral cover. Can you see from the sales agent call what actually happened, please? You see that?
I do, Miss Orr.
And the response that she received below from the second customer service consultant was no.
Childish.
To which the first customer service agent, speaking of childish, Mr Orton, responded by sending 25 sad face emoticons to the second customer service consultant.
What can I say, Mrs. Orr? It's 2016. I was very disappointed when I saw this. Things are changing. That's why I'm here, is to make some changes like this. That sort of behaviour, it was a young company at the time, is totally inappropriate, particularly given the gravity of the situation.
What does this say about the culture within Freedom, that this is how your sales agents are communicating with each other about the situation of Mr. Stewart as reported by him in the call that we just looked at?
It's a very bad representation of the culture of the company at that time. I agree. And that's
And
what
if-
I'm here to improve.
If we go over the page to 0070, we see that the second customer service consultant's assessment after listening to the call was this: hey, first person, I've had a listen to the call. Not once does the policy owner mention anything about being disabled or not being able to make decisions for himself, etc. So it would have been hard for the sales agent to assume that the policy owner had a disability. So no, I would not say we took advantage of him. Can you please get in contact with the father and just apologise and let him know we were not aware he was disabled, and let him know we will cancel the policy off for him. That was the assessment.
You know my view on this, Ms. Orr.
I heard your view on this yesterday, Mr. Orton. I assume that view is unchanged and is inconsistent with the view expressed by this sales agent.
Totally inconsistent with the view that's expressed by this agent. I cannot understand how you could listen to that call and come to that conclusion.
I tender that document, Commissioner.
Emails of 15 June 16 concerning Stewart, FIG 0001 0001 0069, Exhibit 6.96.
And despite that second customer service consultant instructing the first person to contact Mr. Stewart to apologise and to clarify that Freedom was not aware that Mr. Stewart's son was disabled and confirm cancellation of the policy, the first sales agent didn't do that, did she?
No, she did not.
And as a result, Mr. Stewart had to call Freedom again a couple of days later on the 17th of June.
Correct.
And can I take you to the transcript of that call, FIG 0001 0001 0261? So on this occasion, Mr. Stewart spoke firstly with the customer service team, a sales agent, and then he was transferred to the retention team. Is that right?
Correct.
Now, the first Freedom person who spoke to Mr. Stewart and his son, we see from this page, 0261, was the sales agent, and she asked why Mr. Stewart's son wanted to cancel the policy. Do you see that?
Yes, I do.
And Mr. Stewart's son said, I don't want it.
Yes.
And the sales agent responded, OK, that's fine, no worries at all then. And Mr. Stewart said, OK. And if we go over the page, we see he said, OK, so that will be cancelled? And the agent responded, no, I'll have to pass you on over to cancellations department. One moment, please. So that's where we see the transfer. We see that Mr. Stewart tried to resist this, but the agent told him that there was a legal declaration that Freedom had to read to him over the phone,
That's correct.
which the agent implied was the reason for the transfer.
Yes, and it's not the reason for the transfer.
It's not, is it?
No.
The reason for the transfer is to send the call through to the specialist retention officers
That's correct.
who are incentivised to save the policy.
That's correct.
And after Mr. Stewart was transferred to the retention team, we see that the retention agent told him that Freedom hadn't yet got back to him. If we could bring the next page up at the same time, hadn't yet got back to him because Freedom was investigating the call. Do you see that?
That's right, Ms. Orr. And this is a very poor customer experience throughout the entire process. These are the things that we're working to improve.
Freedom had in fact by this time already formed a view on the call, hadn't they?
Well, believe so, from the previous, yes.
Yes, so the view that had been formed was that Mr Stewart should be contacted, that he should receive an apology, and the policy should be cancelled.
Correct.
But instead what we see happened was that the retention officer attempted to explain the benefits of the policy to Mr Stewart at length.
I wouldn't say at length with this, and while I agree that the retention agents have not taken no for an answer on a number of occasions, on this occasion I think she was actually trying to calm the situation down by saying that there was a free cover period, and she didn't do it in a good way. It sounded, and I can understand how Mr Stewart would potentially think that they were trying to save the policy at that stage. So I'll give her the benefit of the doubt personally on that one, but it's still been a terrible process for Mr Stewart.
Well, if she was trying to calm things down, the best way to do that would have been to cancel the policy in accordance with Mr Stewart's request, wouldn't it?
I agree.
Now, in your statement, you say that you don't consider that this was an attempt to persuade Mr Stewart that the policy was worthwhile.
That's what I just said. That's what I was saying.
You say it was an attempt to ensure that before making a final decision, Mr Stewart was aware of the benefits provided under the plan.
For that part.
And that he understood that the first 12 months was provided at no cost.
Correct.
I see. Now, could I ask that you look again at 0263? In the passage that we've just discussed, the retention agent mentioned on a number of occasions that the final expenses cover was free for the first 12 months. We see that twice on this page.
Yes.
And she failed to mention that Mr Stewart's son had also taken out accidental death and accidental injury cover.
Yes, she did.
Both of those policies had premiums that were payable 3 days later.
Correct.
Now, why did that happen? Was that to understate the extent of financial commitment that had been made by Mr Stewart's son?
Miss Orr, listening to that call and listening to all these calls when the company was quite young, the operator, the customer service retention agent, was very nervous, and her words were not flowing. I don't think that there was any intention then to say that the cover wasn't being charged for, but it should have been. It definitely should have been.
You heard the part of the call that we played yesterday where the retention agent, after going away for a period, comes back and tells Mr Stewart that the call has been listened to and it's not obvious that his son has a disability.
You know I don't agree with that, Miss Orr.
Mm-hmm. What do you think about the words that she used at 0264 when she confirmed that the policy would be cancelled but said to Mr Stewart, "You've got to understand where we're coming from at the end of the day"?
Sorry, I've just...
Towards the bottom of the page. It goes for every company. You've got to understand where we're coming from at the end of the day.
My view is that if she didn't believe that Mr Stewart's son was vulnerable, then, and it is difficult on occasions to know if someone's a vulnerable customer. You can't always pick it up. In this particular case, absolutely, it should have been picked up. But I think that's what she's talking about.
Well, her tone changed dramatically after she engaged with Mr Stewart's son, didn't it?
It did.
And she said twice after that she understood where Mr Stewart was coming from.
Yes.
And then following that call, this retention agent had an instant messenger conversation with the second customer service consultant from the exchange that we saw before.
Yes.
You've seen those
I
documents. The second customer service consultant was the one who had formed the view that an apology should be given and the policy cancelled. If we go to FIG 0001 0001 0071, we see an instant messenger chat between the two We see at the top that the retention agent told the sales agent that Mr. Stewart had cancelled the policy and had referred to his earlier email with Freedom,
Yes.
to which the sales consultant replied, "Bloody whinger."
Totally inappropriate. There's not much I can say about this one, apart from say that the people involved have been cancelled by me directly, both in verbally and in written format, and it's totally unacceptable and against the cultural values that I expect of our employees.
The retention agent went on to say that Mr. Stewart would be expecting to hear from Freedom in the next 3 days.
Yes, that's
And
right.
she then said, "His son sounds not normal though. Strange, but the dad sounds like he's going to take it further."
Yes.
To which the sales agent said, "Ah, well, I don't know what he expects to get out of it. LOL."
It's totally inappropriate, Miss Orr. Totally inappropriate.
This is a fairly damning indictment of the culture at Freedom at this time, is it not, Mr. Orton?
Doesn't bode well on Freedom, I agree.
I tender that document, Commissioner.
Instant messaging, chat, 17 June 16, FIG 0001 0001 0071, Exhibit 6.97.
Freedom didn't in fact communicate further with Mr. Stewart or provide the call recordings that he'd requested, did it?
Not at the time in 2016, no.
And you say in your statement that this was because Freedom thought that the complaint had been dealt with to the satisfaction of Mr. Stewart in 2016.
Yes, I did.
But this instant messenger chain doesn't suggest that Freedom thought the complaint had been dealt with to Mr. Stewart's satisfaction, does it? It suggests the contrary.
It does.
And do you accept that Freedom's failure to ensure that the call recordings were sent to Mr. Stewart in a timely way was conduct that falls below community standards and expectations?
In hindsight, I agree with you. I can understand from a process perspective why they thought the issue was closed. What Mr. Stewart should have been given at the time, immediately, was a formal apology and not had to go through that process. He should have been sent those recordings. Eventually he was sent those recordings, but I agree they should have been sent, and it should not have been closed without contacting and making sure that that customer was satisfied with the outcomes.
Do you accept more broadly that Freedom's conduct in trying to convince Mr. Stewart to retain his son's policies in circumstances where he had made clear that his son didn't understand those policies also fell below community standards and expectations?
No, I don't. So I explained that before. My view
think
is
that
my
was
view is
appropriate?
that no, I don't think it was appropriate. I don't think it was appropriate that it occurred that way and came across that way to Mr. Stewart. But I do believe that operator was actually, or that customer service agent was actually just saying this is what the cover is. I don't think at that stage she would have been trying to save that policy.
I'm struggling a little to understand the distinction that you're drawing, Mr. Orton. You say it was not appropriate, but you don't agree that it was conduct that fell below community standards and expectations.
I don't think it's appropriate because it didn't come across the way that I think she wanted it to come across. I'm going to give the benefit of the doubt to her in that situation, but considering that Mr. Stewart took it a different way, and I can perfectly understand why he did, then yes, it's conduct below consumer expectations.
Since the policies were sold to Mr. Stewart's son, the retention strategies that Freedom has employed have become a bit more creative. Do you agree with that?
I think there's been some different retention activities, yes.
Yes, so since at least September last year, Freedom has used what it refers to as retention initiatives to assist its staff to dissuade policyholders from cancelling their policies.
Correct.
And there seem to have been a number of different types of retention initiatives. some of which were focused on retaining people who wanted to cancel their policies, and others were focused on regaining policyholders who'd already left Freedom. Is that right?
Correct.
Could I ask that you look at FIG 0004 0003 1057? So this is an example of a retention initiative from September 2017. Do you see the date in the top left-hand corner?
I do.
And Freedom retention agents were authorised to offer an incentive if a policyholder wished to cancel their policy and hadn't already been dissuaded from doing so by a reduced level of cover or a review of their cover.
Yes.
And in those circumstances, retention agents were authorised to make the policyholder the offer that's set out under the heading positioning. If you decide to keep your cover today, I can offer you our special Christmas promotion, which is only running for the next 2 weeks. With this promotion, you would receive a Christmas Visa card to the value of $, which you can use anywhere that accepts Visa or EFTPOS. All you have to do is pay your premiums on time for the next 3 months and then call us up to request your card, and we'll send it out to you in time for Christmas. You can use it for Christmas shopping or to buy groceries or anything you want. We've never done a promotion like this before, so it's a great offer. So that was a retention initiative from September last year.
It was, Miss Orr, and I've ceased all of these vouchers.
Why have you ceased them, Mr. Orton?
I don't believe in them.
Do you accept that these retention initiatives are likely to lead to poor customer outcomes?
I think they can possibly lead to poor customer outcomes, and I don't think it's appropriate to be offering these incentives just
People who are trying to cancel their policy?
I don't.
Attend to that document, Commissioner.
September 17, Christmas Visa Promotion Retention Initiative, FIG 0004 0003 1057, Exhibit 6.98.
These retention initiatives of this nature were still running as recently as May this year.
I believe so, yes.
Now, if I could ask that you be shown FIG 0008 0008 0179. We see that this is a cancellation recovery call guide. Have you seen this document before,
I have, Miss Orr.
Mr. Orton?
Yep.
And can you explain what it is?
It's for customers that have cancelled recently and contacting them to see if they would like to reconsider their decision, and while they remain within the period that the policy can be reinstated.
So it's a script to be used in that situation.
Correct.
And we see from 0180 that if the person's response, we see this next to objection handling, if the person's response was that they did not wish to reinstate their cover, the retention agent was authorised to attempt to overcome their objection to reinstating the policy.
Yes, from this, that's right.
And that's despite the fact that the person's already clearly told Freedom on a previous occasion when they cancelled the policy that they didn't want it.
Correct.
And do you think the community expects that in those circumstances, when a policyholder has called up to cancel their policy and, against the odds it seems, successfully done that, you would then leave the customer alone rather than continuing to call them and trying to persuade them to reinstate their policy?
Most companies will try to win customers back, but the way in which this was done is not customer focused.
Is this still in operation, this script?
No, it's not still in operation.
When did it cease to be in operation?
I don't know the date, but certainly prior to June.
I attend to that document, Commissioner.
Cancellation Recovery Call Guide, Draft Version 1, FIG 0008 0008 0179, Exhibit 6.99.
Can I ask that you look now at FIG 0004 0003 1054? So this document is from July this year and shows us that in July, Freedom began an incentive campaign geared towards reversing cancellation requests that were received via email or via post. You see that from the first sentence under summary?
Correct.
So this sort of incentive campaign was going as recently as July.
Seems to be, yeah.
And the 3rd of July, the date of this document, was a few days after the letter from ASIC, dated the 30th of June, asking for information about your retention strategies.
It would be, yes, Miss Orr.
So Freedom was on notice at the time it created this retention campaign of ASIC's interest in its retention practices.
Personally, Miss Orr, I wasn't aware of this, but from the dates, you're correct.
Well, Freedom launched this campaign, we see from the document, because it was receiving approximately 60 written cancellation requests per day.
From the document, yes, correct. It sounds right.
And we see that Freedom was concerned that year-to-date written cancellations had resulted in close to $500,000 in lost annualised premium.
Correct.
And we see also from this document that despite making 3 attempts to call customers who had cancelled in writing, Freedom was still only reaching around 25% of customers. That was
Correct.
the problem.
Correct.
And so Freedom developed this written cancellation win-back policy by which it would attempt to win back customers who'd cancelled in writing by making a phone call or sending a text to them.
Correct.
And the principal features of the campaign were that if the customer was still in the free premium period and they decided to keep their policy, they'd get a $50 gift card after paying their first premium. It's right down the bottom of the page,
Sorry.
Mr. Orton.
Sorry. Yes.
And if we bring up the next page at the same time, we see that if they were a premium paying policy holder, they'd be entitled to the gift card after paying their next premium and any arrears.
Correct.
But in either case, they had to call Freedom to redeem their gift card after they made the payment.
Correct.
And we see, if we could leave 1055 on the screen and bring up 1056, we see that this document outlined the expected response to this program and the cost of the program.
Correct.
Of 1,200 written cancellations per month, Freedom expected to be able to contact 300 policyholders by phone,
That's right, Miss Orr.
and you expected that 30 of them would reverse their cancellation.
This is a business case. I mean,
Yes.
This is just the expectation.
And that would give a combined monthly premium of about $30,000.
Correct.
And we see on that page that Freedom expected that it could make an additional $15,000 a month from cancellation reversals in response to a text.
Correct.
So that would bring the total estimated monthly premium intake from this campaign to $45,000.
Correct.
And the campaign was only going to cost Freedom $1,687 a month to run. Do you see that? Plus $78 to send the text.
But plus the staffing cost.
And that cost was calculated on the assumption that only half of the people that you made this offer to would follow through and seek to redeem their gift card.
Correct.
I tender that document, Commissioner.
Retention Marketing Campaign 3 July 18, FIG 0004 0003 1054, Exhibit 6.100.
So this is a very recent retention campaign, Mr Orton, one that was commenced in the period when Freedom appreciated that it was under scrutiny from ASIC for its retention practices. Should it have been initiated?
No, it definitely should not have.
The processes and incentives that all of these documents record are designed to make it as difficult as possible for people to cancel their policies. Do you agree?
I think that's been the outcome, and that's been clear from some of the calls and some of the things that I've seen.
Designed to do everything possible to win people back after cancellation.
Yes, in this particular instance, yes, I agree.
Does Freedom intend to stop campaigns of this nature?
Absolutely.
And what will the retention strategies be moving forward?
Retention strategies, and like I mentioned before, the removal of commissions, making sure that through the new sales process that people are given the opportunity at the end of that 12 months to opt in, which should remove the need for the retention agents in general, but they will have a responsibility to explain options to customers, complete review of processes, complete review of the customer experience, and that's what we've already commenced with Linebridge Consulting. It's what I will be focusing on to ensure that customers are getting the right outcomes. This is an area, Ms. Orr, that we need to focus on. I agree.
Now, I want to ask you a few questions in closing, Mr Orton, but before I do that, I want to come back to the calculations in the document that I referred to earlier today. That was ASIC 0068 0001 0024, and we were looking at 0026 in that document. And I put to you that on our calculations at the time Freedom provided this letter, approximately 69% of Freedom customers who had called to cancel their policy still held that policy without change. Do you see that from D1? D.
So,
The 69% you recall?
yeah, I do.
Now, the 69% is 3,960 policies had been cancelled or lapsed. You see in D1?
Yes.
Divided by the 12,720 who had retained their policies without change gives us 31%. Therefore, 69% of those who retained policies without change still had their policy.
Ah, that's right.
And the other figure that I put to you was 85%. I put to you that over the page on, I'm sorry, we still need this page on the screen. I put to you that on our calculations at the time Freedom provided this letter, 85% of the customers who tried to cancel their policy but were convinced by Freedom to keep it on amended terms continued to hold their policy. Do you recall that?
I do.
And that 85%, we start with C2.
Yep.
7,598 consumers retained their policy and made changes, and 466, or 85%, still held their policy as at the 30th of June 2018.
Correct.
So do you see where those two figures come from now?
I do now.
Thank you.
Thank you for clarifying.
No, my apologies for not being able to do so at the time. Now, the last questions I want to ask you, Mr Orton, are about where Freedom currently sits in the direct life insurance market. What sort of market share does Freedom have?
It depends on whether you're looking at it from a new sales perspective or an in-force premium. From a new sales perspective, probably 10 or 11%.
And from an in-force?
In-force much lower. I don't know the actual numbers for the business. You may have them there, Ms. Orr, and I could probably clarify them if you gave them to me. But we're still quite a young company from an in-force perspective, but from a growth perspective, it's been strong.
In recent months, Freedom's issued a number of media releases about its strategic direction,
Correct.
and we see from those media releases that Freedom is acquiring St Andrews from the Bank of Queensland.
That's correct, Ms. Orr.
And when does Freedom expect that acquisition to complete?
We're not aware when that will complete now, Ms. Orr. We've advised the market within financial year 19.
And we see from the media releases that Freedom expects that acquisition to assist it to diversify its products, including in loan protection products and life insurance cover. Is that right?
Correct.
Can you explain what that diversification will be?
The main diversification is that the St Andrews business is a strong business for loan protection type covers, comes with an extremely strong management team who have been committed to join along with the acquisition. They do offer some life products as well and loan protection. Having both the general insurance and the life company means that you can develop products that are industry leading for loan protection. Means you can cover things like someone's mortgage when they're unemployed. So there is some value in that. It's a very different model. It's a business to business model, whereas the Freedom business has very much been business to consumer, and it offers an opportunity for us to diversify our business.
Could I ask that you look at one of the media releases issued in recent weeks, which is RCD 0006 0011 0002? This was a media release issued last Thursday, the 6th of September.
Correct.
And we see from this media release that Freedom announced that the board had initiated a review of strategic options for the company.
Correct.
And that Freedom linked this to the release of ASIC's report on direct life insurance and to an initial discussion with ASIC regarding that review. Do you see that?
That's correct, yes.
And then the media release says, specifically, the board notes that a significant proportion of Freedom's upfront commission revenue is derived from the sale of funeral insurance by the company's direct sales team, and that changes to a number of lead sources would be required to continue to meet the expectations of the regulator.
That's correct.
Consequently, in order to protect and maximise shareholder value, the board has commenced a broad-based review which will consider matters including strategy, business structure, operating model, and internal practices and procedures.
Correct.
What is that broad-based review, Mr. Orton?
Everything here is a broad-based review, looking at the options that we've already started with the changes to the accidental death, looking at lead sources, which is mentioned in here, looking at every option that is viable. I really cannot say a lot more than what's said in that about what the review entails.
What's the connection between that review and the decisions that you notified the Commission of at 3 o'clock on Monday of this week?
It was some of those decisions were included, but this came out of the same board meeting where we made the changes to commissions.
So the minutes of the board meeting that attended in evidence reflect the decision to commence a broad-based review.
I can't remember exactly if they do.
What is the relationship between the broad-based review and the board meeting that we have minutes for?
Look, I'd have to see the board minutes again to see if they were actually included, but it was soon after that that the discussion was that what are we moving forward with? Because there has been a lot of regulator activity, there has been changes in consumer expectations. The market, we've had questions from the market. We are a listed company, and we're ensuring that we're looking at whatever is the best option for our customers and for our shareholders.
You say there's been a lot of regulator activity. You're referring there to the Direct Life report.
Yes.
Are you referring also to the breach reports that you filed after this media release last Friday with ASIC?
I wasn't specifically referring to that, no, but I was referring more to the direct life review.
Last month, there was another breach report from Freedom in respect of contraventions of the anti-hawking provisions. Is that right?
Correct.
So multiple breaches reported to the regulator on Friday last week. I took you through the different sorts of breaches that were reported in that notice. An anti-hawking breach notified a few weeks earlier. Is this part of the regulatory activity or scrutiny that sits behind the broad-based review?
No, it's not.
We know that ASIC is currently looking at your retention strategies and sales practices as well.
Yes,
Is
they
that
are.
part of what's precipitated the broad-based review?
Everything is on the table, Ms. Orr.
What do you mean by that, Mr. Orton? What is on the table?
I've been here to look at customer outcomes and see how we can improve what we're doing, what's the best thing for the customers, what's the best thing for the shareholders. So we're looking at a range of options. We are looking, of course, very closely at what the regulator expects of us and how we can improve processes. I've committed today to you to improve the retention activities. I'm improving the sales process, making sure that customers have that opportunity before they provide banking details to be given multiple bits of information so they understand their coverage. We're trying to work and move to the situation where we've got customers understanding and being happy with the products that they have, and when they need to leave them or they don't want them anymore, the cancellation process is not onerous. When I can do that and I've got happy customers, then I've got a thriving business.
We know from your earlier evidence that Freedom intends to continue to sell life insurance directly to consumers.
Are you talking, sorry, Ms. Orr, are you talking funeral insurance?
I'm talking about all forms of the life insurance, the 6 products, all forms of them you
We still
continue
intend to
to sell directly to consumers.
Directly to consumers, that's
But
right.
you only intend presently to sell funeral insurance and loan protection cover in outbound sales calls.
Not loan protection cover
Just
either.
funeral insurance.
Correct.
And against the backdrop of your concerns about regulator activity and economic viability, do you consider that it is possible for Freedom to sell funeral insurance in outbound sales and life insurance more broadly on a direct sales model in a way that is financially viable and legally compliant?
I believe, let me separate those two if I can. From a legally compliant point of view, absolutely I do. From a financial point of view, yes, I do as well, but there will be changes to the model, and that's the strategic review.
All right. I'll tender this document, Commissioner.
Freedom ASX media release 6 September 18 RCD 0006 0011 0002 exhibit 6.101.
And I have no further questions for Mr. Orton.
Thank you.
Cool.
Mr. Silver. Thank you. You may step down, Mr. Orton. You're excused.
Commissioner, as you've heard, our first 2 case studies raised questions about the value of accidental death policies to consumers, and the Commission obtained a number of witness statements which reinforced those concerns, and I want to say something about each of those statements. Now, before I turn to those statements, I want to say something further about ASIC Report 587, which is the sale of direct life insurance report released by ASIC on the 30th of August this year. In that report, as you've heard, Commissioner, ASIC expressed a number of concerns about accidental death policies. One overarching concern raised by ASIC was that accidental death insurance was unlikely to perform in the way that the consumer or their family or dependents expected at claim time due to the product and its exclusions being poorly described on sales calls. The data brought in by ASIC indicated that between 2014 and 2017, only 26% of claims on accidental death policies were accepted. 36% of accidental death claims were declined and 38% were withdrawn. ASIC also identified concerns about the value of the product. It noted that the claims ratio for the financial years 2015 to 2017 was 16.1%, meaning that for every $1 of premiums paid, only 16 cents was paid out. The Commission obtained statements about accidental death cover from 10 entities: Auto and General, ComInsure, Greenstone, MLC, OnePath, Suncorp, Westpac and Zurich, as well as Freedom and Clearview, from whom we've already heard. These entities were variously the manufacturers and distributors, or distributors only, of accidental death policies. The statements sought since the 1st of January 2013 information about the accidental death policies offered by the entity, including the key terms of the products, the circumstances in which the products were offered to customers, and the handling of claims under the policies. They also sought data relating to the sale of the policies and the entity's claims handling practices. We'll summarise some key aspects of each of the statements, dealing first with Auto and General, which provided a statement from Mr Warren McAlpine, the Associate Director of Auto and General Services Proprietary Limited. Auto and General ceased offering all life insurance products, including accidental death policies, on the 30th of June this year. Prior to that, from November 2013, Auto and General had been a distributor of accidental death products issued by Hanover. Auto and General distributed its products through two brands, Budget Direct and Aussie Care. Over the last 5 years, Auto and General sold 1,684 accidental death policies. It received approximately $775,000 in premiums. No amounts were paid towards claims in any year. And Auto and General received only one claim, which was denied in full. And that claim was denied because the death was not accidental. I tender the statement of Mr Warren McAlpine, dated the 27th of August 2018.
That will become Exhibit 6.102.
We turn next to Clearview. As you've heard, Commissioner, Clearview provided statements from Gregory Martin, the Chief Actuary and Risk Officer. During the relevant period, Clearview offered 4 types of policies that it classified as providing accidental death cover. 2 were accidental-only versions of life cover, 1 was direct-to-market accidental death cover, and 1 was direct-to-market injury cash insurance. Clearview currently offers only 1 accidental version of life cover through its retail channel. The direct-to-market products have not been offered since the closure of Clearview's direct life insurance business on the 30th of June last year. Over the last 5 years, Clearview sold 14,036 accidental death policies. It received approximately $38.8 million in premiums, and it received a total of 37 claims, of which 38% were denied in full, 43% were allowed, 5% were withdrawn, and 14% were pending. The claims ratio ranged between 1% and 87%, and the claims ratio across all years was 26%. For the 14 claims that were denied, 10 were denied because the death was not accidental, 2 were denied as the accident occurred while the life insured was intoxicated or committing a criminal act, 1 claim was denied because the beneficiary murdered the life insured, and 1 was denied due to suicide. We turn to ComInsure, which provided a statement from Ms Helen Troop, the Executive General Manager. As you heard yesterday, ComInsure provides life insurance through the Colonial Mutual Life Assurance Society, which is frequently referred to as CMLA. CMLA principally offered accidental death cover through its direct and retail channels. CMLA ceased offering cover through its direct channel in 2013, but continues to offer the cover through its retail channel. Over the last 5 years, CMLA has sold 18,928 accidental death policies, with the significant majority being sold in 2013. CMLA received approximately $121 million in premiums and received a total of 1,829 claims, of which 88% were denied in full, 3% were allowed, 7% were withdrawn, and 2% were pending. Excluding 2018, the claims ratio ranged between 3.42% and 23.03%. For some of the relevant period, CMLA's information storage system did not allow it to readily identify why a claim had been denied. However, CMLA could provide that information in respect of 643, or approximately a third, of the claims denied. In respect of those claims, 96% were denied on the basis that the cause of death was not accidental. 5 claims were denied because they involved suicide or self-harm, and 4 were denied due to an excluded condition. I tender the statement of Ms Helen Troop, dated the 27th of August 2018.
That will become Exhibit 6.103.
We turn to Freedom, and as we've heard, Freedom provided statements from Mr Craig Orton, the Chief Operating Officer, and the data provided by Mr Orton showed that over the last 5 years, Freedom sold 65,485 accidental death policies, with the number of sales increasing each year. And between 2014 and 2018, Freedom received approximately $5.3 million in premiums. A total of 55 claims were received, of which 13% were denied, 47% were allowed, 9% were withdrawn, and 29% were pending. The claims ratio ranged between 0% and 55%. Of the 7 claims denied in full, 5 were denied on the basis that the death was due to a non-accidental cause. 2 were denied on the basis that the drug and alcohol exclusion applied. We turn to Greenstone Financial Services Proprietary Limited, which provided a statement from Mr Bernard Grobler, the Chief Executive Officer of Greenstone. Greenstone is a distributor of accidental death products, distributing products offered by Hanover Ray and Swiss Ray Life and Health Australia Limited. Over the last 5 years, Greenstone sold 21,908 accidental death policies and received approximately $46.5 million in premiums. Greenstone received a total of 42 claims, of which 55% were denied in full and 44% were allowed. And excluding 2018, the claims ratio ranged between 7.1% and 25.4%. Of the 23 claims denied in full, 17 were denied as a result of not meeting the definition of accidental death, and 6 were denied because an exclusion applied. Of these, 3 related to intoxication, 2 to the consumption of drugs, and 1 to suicide or attempted suicide. I tender the statement of Mr Bernard Grobler, dated the 27th of August 2018.
Becomes Exhibit 6.104.
We turn to MLC. MLC provided 2 statements on the topic of accidental death policies, one from Mr Sean McCormack, the Chief Customer Officer for Retail Advised Insurance of MLC, and one from Ms Natalie Cameron, the Chief Claims Officer. Mr McCormack explained that MLC offers accidental death policies online, by telephone and through financial planners. Over the last 5 years, MLC sold 1,684 accidental death policies, with the majority sold in 2013 and 14. MLC received approximately $34.2 million in premiums and received a total of 103 claims, of which 61% were denied in full, 36% were allowed, 2% were withdrawn, and 1% was pending. The claims ratio ranged between 19.1% and 3.1%. I'm sorry, that was provided as a ratio rather than a percentage by MLC, 19 to 1, between 19 to 1 and 3 to 1. Of the 63 claims that were denied, 60 were denied because the death was not accidental. I tender the statement of Sean McCormack, dated the 3rd of September 2018,
That becomes Exhibit 6.105.
and the statement of Natalie Cameron, dated the 3rd of September 2018.
6.106.
We turn to OnePath. OnePath provided a statement from Mr Gavin Pearce, the Managing Director Insurance for ANZ Wealth Australia, a division of ANZ. Since the 1st of January 2013, OnePath has offered 2 standalone accidental death policies. Over the last 5 years, OnePath sold 3,200 accidental death policies and received approximately $57.6 million in premiums. OnePath received a total of 435 claims, and of those claims, 14% were denied in full, 69% were allowed, 13% were withdrawn, and 3% were pending. Excluding 2018, the claims ratio ranged between 9 and 22%. Of the 63 claims denied, 50 were denied because the policy terms were not satisfied, 10 were denied because an exclusion applied, and 3 were denied due to eligibility, for example, because the policy was not active at the time of the death. I tender the statement of Mr Pearce, dated the 27th of August 2018.
That becomes Exhibit 6.107.
We turn to Suncorp. Suncorp provided a statement from Mr Christopher McHugh, the Executive General Manager, Personal Injury Portfolio and Product of Suncorp Life and Superannuation Limited. Suncorp Life offers cover for accidental death as a standalone policy direct to customers online or through contact centres. Over the last 5 years, Suncorp Life sold 1,838 accidental death policies. It received approximately $3.9 million in premiums, and it received a total of 10 claims, of which 40% were denied in full, 50% were allowed, and 10% were withdrawn. Excluding 2017 and 2018, the claims ratio ranged between 8 and 85%. The ratio was not calculated for 2017 or 18 because no claims were paid in those years. The 4 claims that were denied in full were denied because the deaths were not accidental. I tender the statement of Christopher McHugh, dated the 4th of September 2018.
Becomes Exhibit 6.108.
We turn to Westpac. Westpac provided a statement from Ms Susan Horton, the Executive Director of the Board of Westpac Life Insurance Services Limited. From 2013 to the 30th of September 2015, Westpac Life offered 2 products that provided accidental death cover. Westpac Life no longer offers either product due to limited sales volumes and increasing costs. Between 2013 and 15, Westpac Life sold 2,178 accidental death policies. Between 2013 and 2018, Westpac received approximately $103.6 million in total premiums. Between 2013 and 2018, Westpac Life received a total of 108 claims, of which 49% were denied in full, 40% were allowed, and 8% were pending. And between 2013 and 17, the claims ratio ranged between 7 and 15%. Of the 53 claims denied, 49% were denied because the death was not accidental, 43% were denied because the death was caused by suicide or intentional self-inflicted injury, and the remainder were denied because the death was drug or alcohol related. I tender the statement of Susan Horton, dated the 30th of August 2018.
Exhibit 6.109.
Finally, we turn to Zurich. Zurich provided a statement from Mr Timothy Howell, the Head of Propositions, Life and Investments. Since 2013, Zurich has offered 2 accidental death products. One of these products ceased to accept new business in May 2017. Over the last 5 years, Zurich sold 484 accidental death policies. It received approximately $490,592 in premiums. It received no claims under the policies, and there was therefore no calculable claims ratio as no amounts had been paid. I tender the statement of Timothy Howell, dated the 3rd of September 2018.
Exhibit 6.110.
Based on that data, some observations may be made about themes common across the statements. First, a significant number of entities had extremely high claim denial rates. Auto and General was the highest because it denied the only claim that it received. Auto and General was followed by CMLA, which denied about 88% of claims, MLC, which denied about 61% of claims, Greenstone, which denied about 55% of claims, and Westpac Life, which denied about 49% of claims. Second, by far the most common reason for denial of a claim under an accidental death policy was that the cause of death was not accidental. This was the case for all of Suncorp and Auto and General's denied claims. It was the case for 96% of the claims denied by CMLA for which a reason for denial could be identified. It was the case for 95% of MLC's denied claims, 74% of Greenstone's denied claims, 71% of each of Clearview and Freedom's denied claims. As you'll recall, OnePath told the Commission that 79% of its denied claims had been denied because the policy terms were not satisfied, but it did not specify the way in which the terms were not met. Some or all of these denials may also have related to the cause of death not being accidental. For most, if not all, of these entities, a death would only fall within the terms of the policy if the accident causing the death was the sole and direct cause of the death, independent of any other cause. As ASIC observed in Report 587, this would mean that a claim could be denied where a person died as a result of multiple factors, even if their death was partly or predominantly due to an accident. The third observation we make is that a number of entities had received few or no claims under their policies. Zurich, which was selling an average of approximately 96 policies a year, received no claims. Auto and General, which was selling an average of approximately 336 policies a year, received only 1 claim. Suncorp Life, which was selling an average of approximately 367 policies a year, received 10 claims. These rates may suggest that these products have extremely limited utility to consumers. Finally, a number of entities have ceased selling at least some of their accidental death products. Auto and General and Westpac Life have ceased offering their accidental death products, the former because it has ceased offering life insurance. Clearview, CMLA, Freedom and Zurich have all ceased selling at least one of their accidental death products in the last 5 years. This development may also suggest that entities are recognising that accidental death products have limited value to consumers. Taken as a whole, the information provided to the Commission by the 10 entities is consistent with the view recently expressed by ASIC that accidental death products have substantial limitations and limited benefits for consumers. Commissioner, if that's a convenient time, we might take a short break before commencing the next case study.
If I come back at 25 to midday?
Thank you, Commissioner.
Yes.